Good morning, everybody. Welcome back to the Market Open. It is Friday, November 29th, 9:28 a.m. We have 2 minutes until the market opens. And, there's nothing else to say other than your boy overslept. Your boy overslept. And there's not even an excuse to make. There's not a story to tell other than your boy had some good food, maybe 1 or 2 drinks, and he overslept pretty aggressively. Food coma, yes, whatever you want to say. Dude, boy, I woke up. There's been moments in my life where I woke up and I'm late for the show and I get super scared. I get out of bed. This time I woke up, it was 9:20. I was like, you know what? I overslept and I don't care. It is what it is. I hope everyone's doing well. Now looking back on last night, there was no way in hell I was going to wake up at 8:45 a.m. to get ready for the market open, but we're still here, and we have 30 seconds left until the market opens. So we did get up right before we have to ring this bell. Thank you, everybody, for being here. Hopefully everyone had a good Thanksgiving. We still have the dividend special that will be starting in just a couple hours. I am trying to share my screen because we do have a market to open. We will see how much liquidity is out there. We do have some crazy stuff going on. Like, I really haven't had a chance to look at the pre-markets, but you got Robinhood right here up 2.6%, Bitcoin 97,000, S&P trying to get back to 6,000. Thank you, everybody, for being here. 9:30 a.m. Even though we woke up late, the stock market is now open. All right. Wake your ass up. Here we go. We're here. Folks, I overslept. I overslept by a lot. No, again, looking back on last night, thinking like, dude, could I have woken up at 7 a.m.? The answer is no. I was so sleepy, but we're here. Thank you, everybody, for being here. Let's see what we got going on in this stock market. S&P 500, 599.49. The other thing that's going to be interesting today is there any liquidity? Is there actually lots of volume going in? It's a 1 p.m. day, so I don't think there's going to be too much, but let's kind of see how it plays out. Robinhood, I did see this one moving last night. This was at like 38.30 last night, 38.59, up 2.44%. This one really getting back to those levels. We were at 38.97 in the pre-market, so that's good. We got Pounty right here, 65.54, up about 0.5%, or actually down 0.5%. The Qs are up slightly. Google is down 0.5%. Microsoft down 0.84%. Microsoft now being investigated by the FTC for existing as a company. So that news broke 2 days ago. UPS down about 0.69%. NVIDIA up 1%. Costco up 1/3%. MicroStrategy up 4.4%. MicroStrategy back above into the 400s. HIMS is down 2%. Moderna down 0.5%. Pfizer up 1/3. IGV software sector up 0.22. Where's the Mag 7? Let's go straight to them. Apple is down. Microsoft's down. Meta's flat. Google's down. Amazon's down. NVIDIA's up. NVIDIA now, I think, bottomed at 131 last week or 2 days ago, 136.84 right now. And Tesla also green. Tesla 1.22. We also have some news on Tesla we'll talk about in a second. But Tesla is green, so we're seeing it right now. Yes, we have a 1 p.m. close. For those that are just joining, we will be having a 1 p.m. close. Market open started a bit late today, but we should still have our show to go as we get into everything. Snapchat right here, 1171. S&P 599. SoFi 1623. Got some momentum here on SoFi, which is not bad at all. Holding above that $16 range, which it closed above that for the first time on Wednesday, so that was good. United Airlines 96.38. Amazon is down a little bit. Arc Innovation 57.59. Roku's up. Square's up. Netflix is up. Nvidia's up. Roblox, Nike 78.71. Google down a little bit. Apple also down a little bit. Alibaba's up a little bit. Crypto stocks are doing well. Wow, Robinhood 38.80. Robinhood's trying to go back for 39. I mean, we were there a couple days ago, and we were actually holding above it for like a good couple hours. 38.91. Wow, look at that. Yeah, it really wants 39. Where's Marathon? Marathon's up 3%. Coinbase is slightly flat. Bitcoin 97.3. Bitcoin actually holding up above 97. Robinhood, I'll check the resistance for 39, but I think it's right there. Oh, yeah, it wants 39. It absolutely wants 39. Palantir 66.38. Palantir just went green. Robinhood 39 has not a ton of shares, 700 shares. I think we're going to break through 39, but there is a bigger wall somewhere else. The wall's at 40. At 40, you got 170,000 shares. At 39.50, you have 16,000 shares, but 39 itself, there's not many shares. We just touched it for a little bit. But yeah, I think we'll get back there. I think we will get back there. Bro sounds tired. For those that are just joining, yes, I did wake up late. Yeah, dude, I am so tired. Archer, 847. Archer's up 5% on the day. Nvidia, 136. That's up 1%. MSTR, 405. Hims, 36. Hims is running a little bit. Grab is down. SoFi, 1630. All right. SoFi wants to make its way to 1650. And then after that, hopefully 17s are on the way. I think 17 gives us the $18 billion market cap to be eligible for the S&P 500. So it has to hold 17 for at least like 6 months, I think, to be eligible. JP Morgan, 250. That's an all-time high. IWM, 243. That's getting back to all-time highs. Marathon's up. Bank of America, 47.91. That's incredible. Royal Caribbean's up. Carnival Cruises up. Apple's up. Or Apple's down. Tesla is up 1%. Palantir right here up 1%. 66.54 currently right now. AR31 says, glad to hear you overslept. You really deserve the good rest. Yeah, I had a feeling I would like sleep and still be able to wake up for the show. I don't know, dude. I guess the Thanksgiving food just hit too hard and knocked me out. I didn't think I would have a problem, but like it just completely knocked me out. Like I woke up at 9:20 and like I didn't even have an anxiety. I just woke up and I was like, oh, I slept. It was like I can't even do anything about this. This one put me to bed. Are you following MicroStrategy? Yes, we have talked a lot about MicroStrategy on the channel, tried to analyze what they're doing. Look, if Bitcoin keeps doing well, then MSTR will do well. And Bitcoin right here, pretty damn incredible, dude. We'll talk about Thanksgiving and kind of how, well, I'll just ask the question out. How was you guys' Thanksgiving? Put it in the chat. And did Bitcoin come up in any conversations? Did Bitcoin come up in any conversations? You know, we were thinking, hey, maybe it would be a bad Thanksgiving if Bitcoin was back at 85,000. Dude, we are trying to push 100K. Right back to the all-time highs that we were at before Thanksgiving. So, I mean, Bitcoin holding up is obviously helping a lot of this. Robinhood right here, 38.90. Palantir, 66.54. Q's, 505. Currently right now, and IGV here at 104. What's your boss going to say? Because you guys are my boss. So, I think some of you guys overslept as well, dude. I think I would have to imagine some people fell asleep versus woke up on their normal schedule. I mean, pretty much. All right, put it in the chat if you. Oh, Robin busting through 39. Look at that. For put it in the chat for who's actually working today. Like work. Either work from home or you're at your job, or who's. Because I think definitely there's a decent amount of people that just don't have work today. Right, Black Friday's just off for them. But put in the chat if you are working. You got Melanie up early to ski. Melanie's a teacher, so I know she doesn't have work because schools are closed for Black Friday. Oh, yeah, international, I forgot. International, you guys, there's no reason for you guys not to have work. T says, Thanksgiving was good. In the morning, I saved a flying squirrel that was trapped in my wall in my house and took it to the wildlife rehabilitation clinic. That's a hell of a Black Friday. That's incredible. Shout out to you, man. A flying squirrel. All right, well... it's back at the rehabilitation clinic, and that's the right thing to do. You'd be the type of person where if there's a bug in the room and you want to smack it with your shoe, you would say, no, don't do it. You know, I'm the same guy. I actually stopped my sister from doing that in India. I was like, no, just let the bug live. Like, why do you have to kill it? My sister's like, no, just kill it. That's good. That is something we need in the world. He was trapped there for 3.5 days. That's wild, bro. That is crazy. SoFi's running as well. SoFi, look at SoFi and Hood leading the day. SoFi 1640, up 1.73%. S&P back to 6,000. Palantir 66.79. Palantir trying to get back to 67. And then Hood just chilling at 39. Not bad. Not bad at all for Hood. Where's Rocket Lab? Let's take a look at that one. Rocket Lab 26.85. That one is up 4.5%. Currently right now. So that one's up. I think we're going to have Steve, guys, at 11 a.m. join for the show. Chris might join, but Steve should be joining. I don't even think Steve knows I overslept. But yeah, 11 a.m. we will get into all that dividend stuff that we have to talk about. Laura says, I kill bugs. Bad person here. See, the thing is, everyone does it. You have to have a unique heart to not actually do it. Palantir right here, 66.83. Google is down. So Microsoft, this down 1%, it could be just algorithmic, or it could be that the FTC is investigating them into their cloud products, their AI products, all that stuff. Basically, they're setting up the foundation to do what they're doing to Google in terms of forcing the Chrome sale with Microsoft. Will that happen? I mean, I don't know. I kind of don't think. If Microsoft somehow goes down from 33 times earnings to 21 times earnings like Google, I will buy so much Microsoft, it'll get ridiculous. But that's not going to happen because investors are not going to look at Microsoft get torn down to those levels. I mean, the reason they're letting Google get hit down to those levels is because search is their main business and the market's a little afraid of just search as a monopoly surviving. But there's no way they're letting Microsoft get to 20 times earnings. And if they do, I'll be a buyer. But that's why I feel like the DOJ thing is a nothing burger. I think if you get a really meaningful dip, that like if Microsoft falls 15%, I'm buying that dip because they're not letting it get to those levels. Microsoft's just too much of a diversified business to be there. SoFi 1644, Bitcoin 97,600, Rocket Lab 2672, Robinhood above 39. 39.50 would be a challenge for Hood, and if you can get above that, guys, we are $1 away from 40s. We are $1 away from seeing 40 on this name. So I think there's a real shot. I think Jason says the technical target is 42, which would be amazing. But we got to just kind of see if that plays out. S&P 500 right here, 6,000. Oh, yes, Zucks, 1650 on SoFi. Didn't touch them yet. Touched them in the pre-market, not yet. So we're still looking for 1650. Yeah, pre-market we hit 1655. We are really close to it, though, right now. So Zucks visited Mr. Donald Trump at Mar-a-Lago, and Politico reported that a source told them that the meeting was for mutual beneficial agreements or something like that, just like getting to talk about ideas. I'm going to try to get the exact quote. But yeah, Zucks was at Mar-a-Lago over Thanksgiving. So was Elon. Elon was eating dinner with Trump last night for Thanksgiving. But Zucks did visit Mar-a-Lago. So yeah, he had to make sure Trump was on his side here. But that did indeed happen. SoFi right here, 1646. Rocket Lab 2650, up 3%. And then he got hit 38.99. Palantir 66.59. The Qs at 506. Google and Microsoft both down on the day. NVIDIA finally making a little recovery from 131 back to 136. What's the Tesla news you want to say? Okay, so the Tesla news that came out yesterday is this. It's not that crazy of a piece of news, but I feel like I've been saying for the past couple weeks, I think something in 2025 around Optimus is going to happen. They're teasing it way too much with Kim Kardashian, and then they put out this video yesterday. Catch. They're going to do it again. Boom. Hand-eye coordination to be able to catch that ball. So very simple video, nothing too crazy there, but I believe that means, or I just believe all these teases means that they're going to come out with something pretty damn soon around Optimus, and it's going to be exciting. We just don't know what it is yet. But it looks like Optimus is going to have some more momentum in 2025. Can we get a cowbell for no reason? Dude, I feel like everyone's so food hungover and the cowbell's just like going to hurt their head. Oh my gosh, bro. I definitely ate a good amount last night. I had some good mac and cheese, bro. Now, we don't really make mac and cheese because like we're Indian, we don't know how to, but the Costco mac and cheese, oh my God, it was amazing. It was incredible. But I'm like legit, like actually like, all right, I ate food and like I legit, it put me to sleep. Dude, I wake up every day at a minimum 6:30 a.m. like, or the latest 6:30 a.m. So I'm early sleep. Even on the weekends, dude, I wake up early. Like I don't sleep in. I might like sleep throughout the day on Saturday after I wake up early. But like I don't wake up at like 2 p.m. on Saturdays or anything like that. Or like, you know, days where the market's not open. I wake up at 6, 7, maybe 7:45 latest. This one, nope. Went right to bed. NVIDIA right here, 136. Costco 968. MSTR 404. Currently right now. Mid check Grab. Yeah, let's take a look at Grab. Grab 503. Oh, Grab is down. All right. 450 is, if they give it to me, I'll be excited for that with a grab. I will teach my secret macaroni cheese recipe only to those who are prepared for the powerful knowledge. Dude, mac and cheese is amazing. When it's made right, it is absolutely amazing. Is grab a buy 505? Look, yeah, I like grab. I like grabbing the fives. If it could get into the 450s, I think it's a much more easy buy. I mean, it's an easy buy here, but like then it's like, to me, it's like, all right, like absolutely. I don't know what it's trading on right now. You know, again, that Bank of America downgrade that they got was just like they're moving too fast. And so if it's like stagnating because of that, then that's fine. Then we might have a little bit more of just oscillating between 450 and 550. 450 to 550, I think, is not a horrible area to buy for me. XRP, I did buy some XRP. So I bought some XRP just so Steve would be quiet. Bought like $150 of it. So I'm up like 10% on it, which is amazing. But we were on the phone the other day and I was like, I'm just buying it so you can't say I don't have it anymore. So I own like, I don't know, 100 XRP or something. And if this thing goes to triple digits, as Steve says, then that's my lotto ticket with XRP. SoFi 1636, Bitcoin 97,000, Robinhood 39 currently. Right now, where is Tesla? Tesla 339. All right, Tesla's getting that green candle back. A lot of negative headlines this week could not take away anything from Tesla's momentum. And then Archer, again, continuing to do well. Archer right here, up 12.25%. What do you think of Nike? I'll talk to Steve about that today on the Dividend pod. I don't know. Look, is Nike going anywhere? No. Are they the best opportunity over the next year? I don't think so, but do I think they're going to recover eventually? Yeah. The question is when. Maybe it's 2 years, maybe it's 2 months, maybe it's 3 years. I don't know. But they have a lot of China issues that they're getting to resolve. They have a new leadership, which should create some fresh ideas. Ackman's obviously advising the board. There's no way he's buying 16 million shares and not having conversations with them. Robinhood 38.97 and S&P 6,000. And I think e-commerce hopefully will become stronger for them over the next couple of years as they digitally transform and basically try to cover more of their brand into consumers' minds. Speaking of Black Friday, Nubank's down as well. Yeah, Nubank's down. Speaking of Black Friday, let's look at the Shopify website. Wow, Nubank down 6%. I don't know why that's down. Shopify right here, 113. And again, things could also be down just because, it's a Friday and there's just like not a lot of money floating through the system, at least on today. So Shopify went all out on this Black Friday thing. Like, it's kind of crazy. You pull down to start and then look at this thing, bro. This is wild, right? Like, this is wild. So we're having $3 million worth of sales happen per minute, 26,000 orders per minute, 16 million unique shoppers. It's kind of wild, bro. That's kind of wild. So it's cool, but it's also wild, bro. Like, I feel like they had a team of people they just stuffed into the room in preparation for this. And they're like, build something. And but like, there's a lot, dude. You can really, like, when we talk about engineering, we can change stuff. I can freaking move this. Like, it's so interactive. Look, there's this gravity thing. Look, you see how stuff starts floating? And then look when I toggle gravity off. Boom. Everything just falls. Like, it's like a real object, bro. Like, it's crazy. So Shopify went all out. Shopify went all out on this. $3 million of sales per minute. Shopify has to beat the record from last year. Last year, they already beat the record from 2 years ago, where they compounded by 20% on Black Friday. If they beat that again, then it just goes to show you. This is why Shopify, although a bit expensive, is one of the sleep well at night names to own if you do own this one, because in terms of e-commerce, they're not going anywhere. They are going to be the leaders for a very long time. All right, SoFi 1647. Let's see if SoFi 1650 resistance is that aggressive. Let me take a look at that. By the way, the SoFi options are up officially 400%. We have a 4-bagger on our hands. We're up 14 grand from a $3,500 investment. We're going to be following it every 100 percentage points up into the 14x range, which is the max value of this spread for SoFi. And we got to get to $20 for that to happen. All right, so SoFi right here at 1650, 45,000 shares, 41,000 shares. That's it. 41,000 shares. And then at 17, which is the big one, 173,000 shares, which again, it just reminds me of the Palantir, Rocket Lab, Robinhood. So like at these intervals or at these price increments, it seemed like hard to get from 16 to 17 to 18, but we've seen it happen on a variety of stocks. SoFi is kind of the last one to do it now from that family of stocks that was under $10 2 years ago. And it's not that many shares to break through those increments as long as buyers are still interested. And SoFi is giving buyers a lot of reasons to get interested currently at these levels now. So SoFi 1650, let's see if that can happen. Canada 2760 says up 100% on SoFi. It's been a fabulous year in my portfolio. One of my many hits. Yeah, it's been a good year for that one. Why is Nubank down 7%? I don't know. Does anyone have an idea? That's it's down 5.6%. Really not sure. Again, a grab right here under $5. Again, it could be low liquidity today because that's definitely a thing. Like where's Palantir's volume today? Palantir volume. Where's Palantir? Palantir volume actually is kind of good. 7 million shares. That's actually a decent amount. That's not bad. Palo Alto 385. Where's CrowdStrike? CrowdStrike got upgraded by every firm to like 380 to 400. CrowdStrike right here 345. So you've got some aggressive price targets on that one as they kind of get back to normal. But that's what you have for CrowdStrike. Were you drinking last night? Admit you sound hungover. I drank a little bit. I had like one drink. I think it's not really hungover. It's more so like I'm just tired, like legit tired. Yeah, I didn't drink enough. If I drank enough, I would say I drank enough. I drank like one small drink, but I'm just tired, bro. Now, granted, I don't drink a lot, so maybe that one drink was enough to do it because I am a lightweight when it comes to alcohol. But I don't know. I'm tired, bro, because I didn't really sleep on Thanksgiving Day. That's the thing. Like, or I didn't sleep in. I think I woke up kind of early on Thanksgiving Day, so I didn't really get the sleep you usually get from sleeping in. And then all of Black Friday, I was awake. So then, I mean, all of Thanksgiving, I was awake. So then, didn't really sleep on Black Friday. Let's see the hair. I was thinking of not wearing the hat today, dude. My hair is crazy. I woke up and I was just like, fuck this, dude. I look wild. Profesco Joe says, Amit, I watched your debate video at the 38:55 mark. You waved off your competitors. It looks sort of scripted. What was going on there? So in World School Debate, when someone stands up to ask a question, you're allowed to do this, which basically means to sit down. It's really funny because you're basically giving them the middle finger, but like that's what is allowed in the actual activity. Like if they stand up, you can either say yes and they can talk, or you can wave them down by doing this. And everyone has their own way of like doing this because it's super funny to just like tell someone to like sit the hell down. But yeah, it's not scripted. That's just the way people in debate kind of talk when they get interrupted with a question. But it's their job to keep interrupting, right? He's talking about this video. For those that don't know what I'm talking about, I shared one of the videos that I was in high school in debate. I'll share it again in the chat if anyone wants to watch it. It's from 2016 against Denmark in the finals of a big tournament in Slovenia. So there it is if anyone wants to watch it. Should have won, man. We lost on a 3-2 decision. We lost on a 3-2. Pretty much everyone in that room came up to us in the hotel after. They're like, you guys got robbed. It's like, yeah, man, that was not the best decision. Why is Archer up 17%, bro? Why, like, what is going on with Archer? Did Wall Street Bets get ahead of this, or is this something like this thing was $3, I think, a month ago? So now it's up almost 300%. And I don't know why it's up 17% in the day. I'm not sure what's going on here. Like, if anyone knows, please let me know. Because if there's no fundamental catalyst, then it feels like it's just retail getting a hold of it. SMCI down 10%. Not sure why SMCI is down, but then again, I don't think anyone knew why they went all the way back up after they fell from the auditing thing. So this one, very, very dicey currently right now. Joby too. All right, so eVTOL in general, just getting a little bit of love. Where's Joby? Joby's up 15% too. That is weird. I don't think there's any price targets or anything that came out. Joby. Yeah, dude, there's nothing. There's nothing. This is just people taking these stocks higher. Helicopters out, Archer and Joby in. crazy retail buyers. I mean, like, that's what it seems like. It seems like retail buyers grabbing onto these names and just saying we're going higher. This was one of the parts of 2025 that we talked about, right? Different verticals that are starting. eVTOL. I don't know if 2025 is when they start legit taking flight. No pun intended, but maybe it is, and maybe people are trying to get ahead of it. SoFi 1635, not breaking through 1650 yet. Hood still over 39, man. I mean, really, really nice strength right here on Robinhood. Again, a lot of that is because Bitcoin is holding in the 97s, but Hood looks like it wants to get 40. This is the last day of trading, I believe, for Robinhood this month. So those trading volumes will come in December. We'll kind of see what November looked like, and it looks like they might be pretty big for Robinhood. Mitt, what's your bull case on Grab? $10. Bull case on Grab is $10 by 2027. I think it could happen by mid 2026. Some people that are really bullish think it can happen by, the next 6 months. But $10, that's my case. 450 is like my real load up dip. 499, $5. I don't hate it buying it there. And I've bought a ton there already. So 450, I would buy a ton more. Is Bitcoin above 98? Are we back there? Oh, we are so close. We are so close to 98. So close to 98,000 on Bitcoin. Okay, I just texted Steve. Yeah, 11 a.m. He should be here. Let me text him and see if he can come even earlier. We can get started even earlier. Let me call him. Let's see. He's not doing anything. It's Black Friday. We know he's not doing it. Yes, XRP is up. Yes, I see XRP is up. That one's doing really well. And I'm an owner now of XRP. So Steve can't say anything. Steve cannot say anything now because I own the name. But he's going to be bragging about it. That's for sure. Yeah, XRP is up 20%. Hey, Steve. So you're on speaker on the market open, but did you know I woke up late today?
No, why would I know that you woke up late today?
You don't watch the market open?
Man, I was in the car driving, so it'd be a little hard for me to watch the market open.
I woke up at 9:20, bro, and I woke up and I didn't even have any anxiety of like, oh my God, I'm late. I woke up and I was like, I fell asleep. It is what it is. I fell asleep.
You're 26 years old.
Dude, I have stress, okay? I'm seeing gray hairs. Like, it's not like it's... Also, I'm 27. I'm not just 26.
Okay, so, you're 27. You're in your 20s. What could you possibly be stressed about? And why do you need to sleep more than 4 hours a night?
Dude, just because you were like a freaking... I don't even know what to call you. Whatever you were doing in your 20s. Like, doesn't mean everyone is built like that.
My generation was just built different, I think.
Maybe. I mean, you could freaking go to the strip club, gamble, drink, and be up by work at 8 a.m. Some people aren't like that.
But, I certainly didn't go to sleep. I wasn't in bed at 10 or 11 at night when I had to be at work at 7 a.m. the next day. I was definitely out till 1 in the morning. And I mean, there was a whole summer where I used to lift at 4:30 in the morning before I went to work. And I promise you, I was not in bed by 11 or 12.
Yeah, see, if I don't get into bed by 11 or 12, I'm dead in the morning. It's like, I don't know. It's like, I've slept late and woken up early to like work before, but usually 11 or 12. Anyway, Steve, can you join the show now? Because we got everyone here. That's what I was calling.
Can I join the show now, you ask?
Yeah, can you bless us? I'm sending you the link right now. Can you bless us with your dividend knowledge? You got a lot of people waiting to hear from you.
Yeah, if you give me 5 minutes, let me, maybe get some milk or something. Sure.
All right, sounds good. I sent you the link.
Later.
This guy loves his milk and cookies, bro. He really texted me a picture yesterday eating milk and cookies. I was like, what is going on, bro? This guy freaking in his 20s stayed up all night, partied like crazy. Now in his 40s eating milk and cookies. He doesn't care. Bitcoin, $98,000. $98,000 on Bitcoin. All right, so how was everyone's Thanksgiving, actually? How was everyone's Thanksgiving? How was it? What movies did you watch? Oh, by the way, Rick Remember that stock we talked about? Steve texted me the other day. Rick is up since we talked about it, bro. Rick is up in the past 6 months, 15%. I'm not going to explain Rick. The only people who know Rick were the people that were on that episode. If you know it, you know it. If you don't, you can look it up and see what Rick's business is. But Rick, if you took a bet on them, they haven't done too bad. Real quick, let me get the charger, guys, for a second. Okay, we are good. Got the charger. Got the computer juiced up. So yeah, Rick's doing well. And overall, last night, I didn't do too much. I ate and then I slept, and that's it. I tried watching some movies. I tried watching the Santa Claus 3. Then I got bored. Oh, do you guys know the movie Flight with Denzel Washington? I've already watched it 2 times. I tried watching it again. I got kind of bored, but I was just flipping through a bunch of random things. Oh, this is so crazy. All right, so I got to respond to this. Tank's Dead says, I banged Courtney, but she says she was thinking of you the whole time. This is hilarious because for those that are OG members of the channel, dude, this is so ironic that you bring this up. So Courtney was the first girlfriend I ever had in first grade. It was a real thing. I don't care what you say. And I've been trying to find this girl just because I just like want to know what she looks like now, 25 years later, right? And I still remember her. And I thought I knew how to spell her last name. I got a picture last night from a friend from first grade who texted me this picture of us. And in the picture, you know, at the end of these school photos, it like lists everybody's name. It had her actual last name. And I realized I was mixing up 2 of the letters the whole time because I haven't been able to find her because I didn't know how to spell her last name. And so I got her actual name and I typed it in and I think I found her. And I sent her a request to like be friends. And it's kind of crazy, dude, because it would be, I just want to see if she remembers me from first grade, dude. It is so wild. But like, I was thankful I got that picture last night and I actually know her name now. So it's kind of crazy. Drop the last name. I'm not dropping the last name, but I want to hit her up and just be like, do you remember me from first grade? That's wild, right? That is so crazy. It's so wild. So it's funny you bring her up, bro, because like, I actually figured out her last name last night. It would be cool. It'd be cool if she actually remembers me from these years ago. But yeah, I guess that's one thing I did last night. What else did I do last night? I drank a little last night, spent some time with family. Oh, my mom made us go around the table and like say what we're thankful for. So that took like 30, 40, 50 minutes because everyone was saying what they were thankful for. So I was going, oh, you guys know my dad wants a Tesla now. My dad, he's been seeing my Tesla. He's like, now he wants a Tesla. So I don't know if we're going to get another Tesla, but my dad is like, it's honestly, dude, he wants a CRV as well. But the Tesla's legit cheaper than the CRV, than the Honda CRV with the freaking EV credits and the referrals and all this shit. Like it would be, that's how crazy Tesla's deals are. Oh, SoFi's above 1650. There we go. SoFi above 1650. But that's how crazy these Tesla promotions are. They are buying a Tesla Model Y is cheaper than buying similar cars from other companies. And usually that's the opposite because Tesla is like, you know, a premier expensive brand. So I think Q4 is going to be wild for Tesla. Like I think we are going to see probably close to 500,000 cars, if not above 500,000 cars delivered. I really think so. MicroStrategy here at 413, Robinhood above 39, SoFi nicely above 1650 right now. 17 ends up being the new path, and Bitcoin right here 98,200. 98,200. Mip and Pullens' birth. So it is wild. Like obviously it wasn't a real girlfriend. It was first grade or whatever, but we were pretty close in first grade. And it's one of those things you just remember when you're little, right? And she was one of the, the friends that I remembered. So it would be cool to connect with more people. I think also as we get older, we want to, connect with people from the past and just like hit people up, see how they're doing. So I think that's just one thing everyone, I guess, wants to get more out of from life, especially as you get older. You're just more grateful for memories that you've had with people. Marathon right here, 2880, Bank of America 4784, JPM 249, Snowflake 176, CrowdStrike right here at 348. Speaking of getting older, let me show you guys this. This was the cutest thing ever. So she's probably not in the chat right now, but she might see this. We had Myra, who is one of my big supporters. She's been, I don't know, 3 years, been following the channel. Look at what she posted on Friday. This was cute. This is me doing the market close. Little baby. Gordon from Market News. This is the cutest thing ever. So nice to see. Shout out to Myra. We got the little kid who is going to be selling puts and calls at 5 years old. When I have a kid, I need to make sure that I don't overbear them with like stock market talk, because as a parent, I've seen this happen many times. Like, you will want your kid to like be good at music or the piano because you were good at the piano, and then the kid will end up like resenting piano, right? Or music, because like, if their dad was really good at the piano, then they don't feel like following in their dad's footsteps or whatever. There's like weird psychology that happens there. So like, I want my kid to do well at debate and the stock. I want them to actually be passionate about the stock market. Like, I don't want my kid to like look at stocks and be like, oh, that's like boring. So I need to figure out a way to not talk about it so much to the point where they get annoyed, but also put, moments of the stock market into their life so they start caring about learning about it themselves. It'll be a challenge, but we're going to need to find a way to do that. I'm buying more Marathon when Bitcoin hits 100,000. Bitcoin 98,000 right now. Where is Marathon? 20. Wow, that's 20. I don't think we hit the 29s for Marathon before. 8%. I don't think we've seen the 29s. I think it tapped out at 28.70. Yeah, this is legit. Yeah, all-time high, or not all-time high, but 52-week high on Marathon. Hood still holding above 39, still holding above it. There's some sellers there, but if you get a little bit more volume, I think Hood can crack its way into that 39.50 range. A close above 38.50 though today would be awesome. And then SoFi just chilling here at 16.54. All right, folks, it is Black Friday, and as my voice cracks and as I'm late to the stream, we do have something very special in treat, which is a conversation around fixed income and dividends and how to take all the risky money you've made and put it into stuff that hopefully is not that risky. Ladies and gentlemen, Mr. Santa Claus himself, Steven Fiorillo.
Why? Because
Santa Claus because of the cookies and milk. I said Santa Claus because you enjoy cookies and milk, and you texted me a picture of eating cookies.
Yeah, I mean, I may have bought an extra large chocolate chip cookie yesterday from the bakery to enjoy today. I don't know.
So have you watched the Santa Claus?
No.
With Tim Allen?
No.
I legit think you're the Santa Claus, bro. Because Tim Allen is a regular guy working a regular job, and then he realizes that he's Santa Claus, and he starts eating cookies and milk like crazy, and he actually becomes the Santa Claus. I don't get how you lecture me about movies, but you've never seen this movie.
Because I watch good movies.
No, the Santa Claus is a classic Christmas movie. What are you talking about?
You've never seen Casino. You didn't even know who Eddie Mush was.
All right, chat. Do you guys know who Eddie Mush is? Put in the chat. I can't be the only one who didn't know Eddie Mush. Yeah, see? So look, no way Steve hasn't watched the first Santa Claus. Steve, it's Tim Allen. It's the guy. Like, it's iconic. Home Improvement. Have you seen that show, Home Improvement?
Yeah, Home Improvement was great.
All right, so Tim Allen from Home Improvement was in the.
How does nobody know who Eddie Mush is?
Thank you, guys. Finally, the chat has my side.
Did nobody watch A Bronx Tale?
No one knows.
Like, really?
Thank you, guys. I appreciate it. But everyone knows what the Santa Claus is. Look at this. How have you not watched the Santa Claus? This time, you're taking the shit. All right?
How have you not watched A Bronx Tale?
Admit giving someone movie advice is wild. That's how bad it is that you didn't watch the Santa Claus, because I have to tell you to watch it. That's
wild. Yeah, it's never going to happen.
You should watch it tonight. You should watch it. It's a good one.
I promise you I will not be watching the Santa Claus tonight.
You should be eating milk and cookies. I'll do the same. I'll get some milk and cookies. We'll both watch it together. Then we can talk about it. I think you'll enjoy it. I really do. I think you'll enjoy it. Oh, you know what Netflix had the other day? Fast and the Furious. I've never seen that. So I clicked on it for a little bit. I got bored, but I didn't watch it. So
yeah, keywords, a little bit.
Yeah.
I still can't believe how big that franchise became. It's crazy.
All right, so Steve, we've got some conversations to have. I think let's start this is kind of going to be your show to really discuss your philosophy around dividends, and then we'll discuss some specific stocks. But in general, for those that have made money in growth stocks that want to transition into some dividends, a portion of their portfolio, you've been doing this for the past 20 years with dividends. How should people be thinking of a dividend portfolio? How should they be thinking about capital appreciation? And what is the philosophy that anyone should get into if they want to start stacking up on dividend stocks?
I mean, look, I can only speak about myself. So I'm going to phrase everything I say as what I like to do, because everybody has to figure out what their own risk profile is, risk tolerance is. But for me, I don't look at dividends as protecting profits, because if you're going to start investing.
Oh, you're muted. You're muted. I think you muted yourself by accident. There you go. You're good.
That happened, but okay. I think you did it, but
No. I didn't do it. I think you did it.
if
Maybe I did it by mistake.
So for me, if I'm going to invest in something like Verizon, I have to be okay with underperforming the market on a appreciation basis, because you very well could underperform the market. So when I think about protecting gains, for me, I would just put in an S&P index fund, anything that I want to still make money on, but I'm not sure where to put it, instead of staying in cash, because over the long term, S&P index funds have done very well. When I think about income investing, it is a completely separate side of my portfolio where I am building out an income stream for the rest of my life. And I am looking at it as this money is not getting sold off. I am fine with, I need to turn the chat comments off because they're freaking hilarious.
Which one's making you laugh? Which one?
I don't know. Some of them were pretty funny. I had to turn it off. But when I put some money into income investing, it is money that I am good locking away for 20, 30, 40 years, and it's to build out an income stream. I am okay underperforming the market. I am okay with not getting that appreciation because I have other investments to facilitate that.
So I think this is really important. The first step of being a dividend investor, even a portion of a portfolio, is realizing you might underperform the market, and you've got to be okay with that.
Yeah, you have to be honest about it. You know, we're not talking about buying Apple for a dividend investment, because the bottom line is Apple's dividend is what, 0.5, 0.6%? I mean, sure, it has a dividend, but they're more focused on buybacks. So I have to be okay with, if I want to get a respectable yield that is going to be the same or larger than the risk-free rate of return, I'm going to be allocating capital to companies like Verizon or Altria, stuff like that, that could underperform the market. And I have to be okay with that. And the number on the screen doesn't matter. The cash flow matters, and the dividend growth over time matters. So if you say, okay, 20%, and I'm not saying that this is what I do or what anybody should do, but if hypothetically you say, okay, no matter what I'm going to invest in, when I sell it, whatever my capital gains is, 20% is going to get reallocated to income investments. You have to be okay with that potentially staying flat, going down, or going up, but underperforming the market, because it's a stream of income, whether it's quarterly or monthly. And then I let that dividend income compound and grow and become larger over time. But if you do that for a 20, 30-year basis, my philosophy is whatever I have in retirement accounts, whatever I have in other investments, my income portfolio should offset the loss of income from my job when I retire. And the goal is for me to really have, by the time I retire, all of my bills paid for from dividend income. That is my goal. So I can use the rest of my money to do whatever I want with. Now, that may not be how some people want to invest. That is one of the ways I think about investing, is about what would the future Steve want?
Right.
And I would like to pay all my bills from dividend income and do whatever I want with the rest of my money.
Okay,
That's
so
just
one more question before we get into the specific stocks. If someone says, well, I can make more income by covered calls or just by like buying Rocket Lab at 14 when it goes to 28, how do you respond to that person when trying to?
They absolutely could. I mean, there's no right way to invest. Everybody has different goals. Everybody has different risk appetites. different things work for different people. I don't think that people should mimic what I do because I'm all over the map. I do a little bit of everything, but that's just my investment style. I have 100% of my retirement portfolio in an S&P index fund as protection from myself. I mean, that's the bottom line. I am protected because I max out my retirement and it all is an index fund. So I'm protecting myself from myself with that. But on my regular investments, I surely have a dividend portfolio where I'm trying to get to a certain number because when I retire, I am figuring that my annual expenses will be X and I would like my dividend income to take care of that. So whatever I get from Social Security, if we still have Social Security, whatever I take out of retirement accounts at a 4% drawdown because you have to, and whatever my other assets are, I don't want to need to live off of. That's just my goal. Not saying that should be anybody else's goal, but you definitely could make more or do better with covered calls. But once again, that comes with work. I invest in Verizon. It's set it and forget it. That quarterly check comes in. It gets an annual increase every year. I don't have to worry about it. I don't have to continuously look at spreads. I don't have to look at option premium. I don't have to look at anything. So you could easily buy NVIDIA or Palantir and write covered calls, but you got to stay on top of it. You got to deal with rolling. You got to deal with other stuff. So,
okay. So I think the main point of information here that everyone needs to take away, because it's true. Like if you buy Verizon, you're more likely than not going to underperform. You're going to definitely underperform Rocket Lab, right? If it's growing really well. So that's okay. And that's money that can't be seen as like burning away in a certain section of your portfolio. Maybe you feel like it is if you think there's a better opportunity, but if you have the right mindset around what you want your dividend portfolio to do, which is just compound the dividends over time and make income, then it's a different philosophy. Okay, so let's get into the factors then of choosing a dividend stock. So here's what I'm going to do. I'm going to start a playlist right here on Webull for dividend stocks. I want you to just name me a stock that has a dividend that you like. Let's go through like 10 of them. And then we'll just spend 5-10 minutes on each of those stocks around why you like them.
Yeah, just give me one sec. I want to find something I built out. I'm not sure if I deleted it or not, but it's pretty interesting. Just give me a sec.
If anyone has any names as well, put in the chat and we'll talk about that. Bitcoin right here, 98,540 currently right now. It would be pretty awesome if we actually hit on 100,000 today. Right now we're currently at 98.5 and that is up decently from 90 on Monday. So you do it as a drip. Yeah, some people probably definitely doing it as a drip, which is like a reoccurring investment. Other people might not be doing it as a drip. We have some good names right here. AT&T, the Schwab dividend one. Yeah, that's a good one. PMAB. Joe says, I'm a dividend stock and my divvy stocks are NVIDIA, Google, Apple, Microsoft, Meta. They all pay such a small dividend, but they do indeed pay dividends.
All right. So I got two things I want to share real quick. So the first one we'll start with Enbridge, and I'm going to show you something I built out. But when it comes to ENB, dividend companies, I'm looking for stuff like this. Enbridge has 29 years of consecutive dividend growth. Its dividend, even though it is not growing as quick as it was, has compounded at 10% CAGR since 1995. They have paid a dividend for over 69 years now. They are an energy infrastructure company. They have one of the largest pipeline bases. They have the largest utility network in North America, and they have a pretty large renewable portfolio. In my opinion, Enbridge is not going away. We need energy. Oil and gas is always going to be here. And I think that that's been proven. People have been saying that oil is going to be gone in 10 years from now since the 70s. People said acid rain was going to kill off all the crops within 10 years also. None of that stuff has happened. So when I see something like this is very interesting to me. And then if I actually look at their dividend yield, I think it's at 6% right now. So the Enbridge has a 6.07% dividend yield. I mean, it's hard to go wrong with that. And especially when you're getting that dividend growth. I mean, oil's just not going away. It's in plastic, it's in every type of petrochemical. It's used to create fertilizer, the clothes that you're wearing, the keyboard you're typing on, the cell phone in your pocket. Oil and gas isn't going anywhere. It's the number one feedstock for energy. It should for
These guys make oil, or they are a pipeline. What exactly do they do?
They transport.
Okay.
So if we go to their asset map,
Enbridge year to date as well. From a
I actually just wrote an article on them.
Oh, they're up 18% year to date. So this year has been good for them as well.
I mean, they sold off a lot, but look, you're not recreating their infrastructure. And this is why I like pipeline companies a lot for income investments. And I'm going to explain exactly why they're so great for income. But when you look at this map, I think they have something like 90,000 miles of pipeline between their oil and gas pipelines. You can't recreate that. Like, this isn't, Amit and I cannot go raise $100 million or $1 billion and just decide that we're going to become a pipeline company. But we could go hire the best engineers away from Google, pay them a obscene amount of money, and try to compete in SaaS. Whether we're successful or not, it's a different story. But that is entirely feasible, that we could go get engineers coming out of college or try to lure them away from big tech companies and try to compete. May not be successful, but we can't go just build pipelines. There's a ton of regulations. You need the knowledge, you need the land, you got to pass the environmental studies. Like, there's just a lot of stuff. So the way that a lot of these pipeline companies work is through either fee-based or take-or-pay contracts. So take-or-pay contract means Amit is an upstream producer such as Exxon, Chevron, Occidental, Conoco, one of those companies. They're drilling oil and gas. They need to transport it. So they are going to, on a take-or-pay contract, they're going to reserve a certain amount of volume on a pipeline company's infrastructure. Whether they use that capacity or not, even if they only transport 70% of what they contracted, they're still paying for the full freight. So their revenue is protected from that. A lot of people say, well, what about commodity price risk? Take or pay eliminates commodity price risk from oil going up or down. Same with fee-based contracts, because they also have fee-based contracts, which sets a certain fee per MMBLS being transported on gas or barrels per day on oil being transported for oil, and has nothing to do with commodity base. So these companies are hedged against if oil plummets because production goes up. But it is still the most efficient and safest way to transport oil and gas. Pipeline companies are not going anywhere. So that's why I like them for income investments.
Okay. What's the next one?
I mean,
I think let's do Altria Group. Let's talk about that one.
Yeah, I mean, Altria Group gets some heat because of the sector it's in, but I try to look past that. I think everybody is an adult. I don't partake, but if you want to partake in it, then it is what it is. I mean, the bottom line is this is a company that's, I believe, if I remember correctly, done 56 consecutive dividend increases over 50 years or 54 years. It's one of the two. They're a dividend king. They are still yielding 7.08%. They are growing the dividend through 2028 at a mid-single digit rate based on the EPS that they generate. I mean, it's been a dividend champion for so long. And even though nobody listened to me when it was at 41, even at 57, it is still a 7% yield. So, I mean, I like Altria Group and I like British American Tobacco also. I think there's way more value in BT right now from an appreciation standpoint, but Altria Group is a solid income producer.
So the thing
One of
about
the things I
Altria,
want to show you, though,
okay, go ahead.
go ahead.
No, I was just gonna ask. Altria Group to you, it's like
No,
it's a solid income producer. They sell a product that is highly in demand, and they're growing even if they're not growing like crazy, which is why you like it.
Yeah, it's not a growth company, but their earnings per share is growing. Their dividend is growing. This is a product that's been around for hundreds of years, if not longer. And with the new administration coming in, it's a pretty much a fact that Republican, the way that they set up business is going to be more favorable to the tobacco industry than if Democrats were in power. I mean, there's probably going to be less regulations, probably be less lawsuits. Now, those are probablys. I may be wrong on that, but I mean, I'm not too worried about it. People have been saying that tobacco is going to be illegal since the 80s. I mean, that hasn't happened. It's just like oil. So from an income perspective, I like it. But I do want to show you this. So
Okay.
I built something out on PDI, and this is something, Chris, you and I have talked about in the past. So forgive the share price because the share price is no longer $17.50 anymore. But something like PDI, PIMCO is one of the largest asset managers. They have over $1 trillion in AUM. This fund is their premier corporate debt fund. And they have an annual distribution of $2.65. Right now, it's around a 13.5% yield. And when it gets reinvested, it reinvests at a 5% discount. So if you look at this, start with 1,000 shares of it, even when it was at $17.50, you are adding 13 shares a month on this with the monthly distribution.
This is ticker PDI.
Over an 8-year PDI, over an 8-year period, if the price stayed static, which we know is not going to happen, this is just a model. Okay. If the price stayed static at $17.50, your 1,000 shares in 8 years would grow to 3,549 shares. And your annualized income would grow from $2,650 to $9,400.
Wait, why do your shares?
So you got to think,
grow?
Because you're reinvesting every month.
Oh, okay.
So every month it pays a monthly distribution. Your first monthly distribution is $2.20. You're reinvesting at $16.63 because you're getting a 5% discount, and you're reinvesting and buying another 13 shares the first month, and that keeps going up. I mean, you get to completely compound. You hold something like that for 20 years, that first investment, even if you never add another dollar of your own money, could turn out to be $20,000, $25,000, $30,000 in future income. So
Right.
you got to have a long-term mindset, and you got to want to generate income. If you just want capital appreciation, but you want a safer way to take some profit off the table from a more risky investment, go buy an S&P index fund. You're probably going to do pretty good. So once again, you got to want to invest for income as part of your portfolio and be okay with underperforming the market on a value on the screen.
What is a percentage return in a dividend portfolio that is acceptable in a good year?
It could be anything.
Like
it could 10%? Be anything. That's high. That's very high. But I mean, look, that's everybody's individual question they need to answer. One of the most popular and best dividend funds is the Schwab High Dividend Fund. It's got 3.5 or 3.25% yield, SCHD. That's
would this be an easy one to pick if you don't want to pick the actual stocks?
Yeah, I mean, look, I own SCHD. We've had it for a long time as one of our income investments. It's a great ETF. I mean, 3.3% yield. You're getting 103 companies. The top 10 companies are Cisco, Bristol Myers, Home Depot, BlackRock, Chevron, Verizon, Altria, United Parcel Service, Texas Instruments, and AbbVie. I mean, they're all solid companies. They have some pretty solid metrics on how they pick companies. It's only large caps. And it's a pretty diverse ETF. Their largest sector is financials at 20% of the portfolio. So this has also compounded very well because 12 years of dividend growth, 5-year growth rate on dividends, 12%. So even though you're not getting a huge yield off the bat, you're getting a lot of dividend growth.
Right. And I think
Your
that's
camera went off. Okay.
Yeah, it's not charged that well today. But 5 years, 54%. Peter, thank you for the $10 super chat. I just bought Energy Transfer after reading an article from Steve on Seeking Alpha. So let's get that out of the way. Let's talk about ET and why you like this one as well.
Yeah. Look, ET is my favorite pipeline company for pure energy infrastructure. Like Enbridge is the most complete.
When you bought ET, did you have to phone home?
No. Did not have to phone home. I don't know why you think that is funny.
Have you seen the movie?
I think I watched it when I was a kid.
Okay, I've never seen the movie. All I know is that one line. But
I mean, I can't remember the movie, but I have to say that it came out when I was like 6, so probably saw it.
Okay. Anyway, why do you like ET?
Look, Energy Transfer is the largest pipeline company in the U.S. I still think they're undervalued, and you cannot replicate what they are doing. They have export facilities on the Gulf Coast and on the East Coast. They're the only infrastructure company that has export facilities on both coasts. I don't know of anyone else that does. And they have acquired a lot of companies over the past couple of years, and they have built out an infrastructure that is extremely hard to replicate. I don't think it can be replicated. And you're getting 7.5% yield with them still. And I've been pounding the table on them for quite some time. And I think it's going higher. They're in 1995.
Yep.
When the hell did that happen?
We're up almost 3% today, bro.
Jeez.
So this one sends you a special K1 form, right? Can you talk a little bit about that?
Yeah. So that's the thing you need to look at with any limited partnership. Enbridge does not issue a Schedule K1. They do a 1099. So depending on what broker you use, it'll just be on your annual tax form, what you owe in taxes. But because Energy Transfer is a limited partnership and its pipes run through like 38 or 42 states, you actually have to pay taxes on that income through all the different states. So yeah, Chris is right. They also signed a deal for the Lake Charles export facility. So they're going to be very big in liquefied natural gas, in addition to oil and nat gas and some CO2 that they do. So it's big industry. You look at what Cheniere is doing, it's going to be very big. But the Schedule K1, you have to pay these taxes because they get a huge tax break. I believe it's 90% of their earnings have to get paid out. It's very similar to a REIT, to their partners, which is you, me, whoever invest in it. So you get a K1 form at the end of the year. And my accountant hates them. He bitches and complains. And they come late. They usually don't come until March. So anybody who likes to do their taxes early and get rid of them, you really can't do that. You're filing end of March, beginning of April. And, you know, you also have to look at UBIT, which is another thing. If you're trying to shield it in an IRA account, be very careful of the laws. And all I'm going to say is make sure that you speak with a CPA to see how investing in Energy Transfer or one of those companies would affect you, because the Schedule K1 does have tax implications. But for this, I would stay away from ET because I'm going to assume that this is a taxable account. And personally, I don't want to deal with any K1 forms in a taxable account. Now, people have another idea because it helps reduce your cost basis, et cetera, et cetera. There are tax advantages to having it in an account. I just don't want to deal with the K1 form. So that's why I don't. A substitute would be AMLP, because that is probably the largest pipeline ETF there is. and it gives you a 7.37% yield. Energy Transfer is 14% of the fund, and it gives you all the great ones: Energy Transfer, MPLX, Enterprise, Prox Partners, Plains All American. I mean, it's got everybody in there. So I would put, assuming that this is a taxable account, AMLP over ET.
Okay, we got Chris joining the show remotely. Let's get his thoughts on ET as well.
What's up, guys? Me and Steve have gone over ET quite a bit, and let me tell you, it's probably one of the best investments, especially if you are of the older variety, because at that point you're not really generating too much income outside of Social Security and some other things. So number one, you benefit from a tremendous amount of capital, like pretty much distributions without having to deal with a lot in taxes. So for anyone that's older, this is amazing. Another thing to consider also is that the way that the taxes work is that majority of the taxes are actually deferred, because what happens is it comes in as a return of capital. What that means is that, let's say you bought this at $25 and you got a $2 dividend from it. That means that you're not paying taxes on that $2. It's going to be a return of capital to a good portion of it, which means your $25, your cost basis is going to turn into $23. And then the year after that, if you get another $2, it'll be down to $21. And the only time you pay taxes on any of those gains is when you sell. Now, here's the thing. If you, or let's say, have a loved one who you love and trust, of course, and you say, you know what, I've got $500,000. I want to give them some sort of income generation ability, and me, I want to get a nice cost basis. What you can do is send them that thing. The cost basis goes to them, and when they pass away, it gets reset to the current value of that stock. And what ends up happening is now all of those quote unquote taxes end up go away. They disappear. And it's a freaking great tax strategy. I have a bunch of dividend stocks also that what I've done is I've transferred them to my parents and to my mother-in-law and father-in-law. Now, what is the benefit of that? Number one, they get the income. They don't generate too much in terms of total cash right now. So they're getting to enjoy that money. But what's awesome is when they pass away, all of those gains end up getting reset. And now my cost basis is what the current market value of that dividend stock is. And that is one of the key loopholes. If anyone wants to know, it's called upstreaming. And it's something maybe, Steve, you can explain a little bit further.
Yep. Yeah, I mean, look, you're talking about upstream producers?
No. I'm saying upstream taxing, like basically taking something like Energy Transfer that provides K1s, sending that to your, to an older parent, right? Letting them generate the income on it, and then when they pass away, it comes back to you with a reset cost basis.
Yeah, I mean,
you can do that
I don't.
with a lot of things. Yeah.
I don't think that we should be talking about different tax strategies, but what I would say is that I am not a CPA. There are very interesting ways to benefit, and if you talk to an accountant, they will probably say something like ET that has that type of tax
all right.
structure.
So we can avoid the tax question, but one of the things about investing in dividend stocks is knowing how you're going to be taxed on it, because that is a very important thing. So right now, some people like, look at me, I got a 10% return. And I'm like, okay, what's your tax rate right now? They're like, oh, I'm in the highest tax bracket. I'm in 35%. And my state income tax is another 14 in California, which means half of that is going to go to Uncle Sam and Gavin Newsom. What does that end up meaning for you guys? That means that your 10% yield is actually 5%, because 50% of it went to people outside. Right? So your actual yield is only 5%. So one of the discussions, make sure you guys have when it comes to dividend investing, is the tax part of it. Because a lot of people will look at these income things and look, I'm making a 7, 8, 10% yield. But in actuality, because they're paying out so much, they're getting hit with taxes.
So is the dividend yield short capital gains? It has to be, right?
It depends if it's qualified or non-qualified.
Yeah, and that maybe, Steve, you can explain that.
Yeah, I mean, I don't want to get too involved, but qualified dividends have a different tax rate. It can be 0, it can be 15, or it can be 20%. Non-qualified dividends can be 10 to 37%. So it has to do with your tax bracket and some other things.
Yep. So that's one of the key things also to remember when you're doing dividend stuff. You have to take into account taxes, and it's the same thing with selling options as well. I think a lot of times people will look at selling option and be like, "Oh my God, look at me! I made $1 million in premium." Yeah, but if 50% of it is going to get taxed away, that you didn't make $1 million, you made 500,000, right? So the key is don't just look at every investment from the perspective of, oh, what is my return when I get this quote unquote phantom income, or what do I actually get to keep? And that's why a lot of people, especially if you're working a 9 to 5, you're making good money, these things don't necessarily work out as well as if you were, let's say, retired or you're close to retirement.
Or if you put them in an IRA.
Or you put in an IRA, correct.
Okay, so we have
the big difference between the two is qualified dividends are taxed at the same rate as long-term capital gains. And then non-qualified dividends, which are ordinary dividends, are taxed at the individual's regular income tax rate, which is 10 to 37%. So, I mean, you really got to take that into consideration when you're building out a dividend portfolio, because look, if you're on the bubble of a different tax bracket and you start generating $10, $20, $30,000 of dividend income, and that pushes you over, part of your income is now going to be taxed at a higher rate because of the progressive tax system. So you do have to take these things into consideration.
All right, so let's talk about another name, and I think Chris maybe could give us some light on this one. So we talked about PIMCO, Schwab, ET, Altria, Enbridge, Verizon. How are you guys thinking of that name in 2025 for dividends?
So one of the things that I like Verizon, don't get me wrong, but I'm also not a fan of some of their recent moves when it comes to their acquisition strategy. They acquired, forgot what company, but basically they took on Copperline and all, not just Copperline, but like fiber optic connections to add to their portfolio, right? So I forgot what company it was, but I'm not a fan of it because I see Starlink starting to become a mass market product. And the thing is, the reliability on Starlink is so high that a lot of places that are more remote, it doesn't make sense to buy fiber optic lines, especially in those areas that could be connected via Starlink. And so now what ends up happening is you're basically paying for a transmission line that costs a crap ton of money to not only install but maintain, but then at the same time, you're getting disrupted by a newer technology. So in that regard, I'd say, Verizon still has probably 10, 20, maybe 20 years of real business. But if they don't get their shit together, satellite could theoretically now take command of a good portion of that telecommunications market, or at least be a massive competitor. And so a lot of the investments that Verizon has made over the last 10, 15 years in supporting copper and fiber optic lines for like higher speed internet very well could be disrupted. So just keep that in mind in your investment thesis. But Verizon overall is a great business. It's not going anywhere. Everyone and their mother has a cell phone. Everyone and their mother is looking at internet connection as a primary way of doing this. You can cut off a lot of things in life, okay? You can cut back on food, but you can't cut back on your internet because no one wants to tolerate, oh yeah, let me just get some like bullshit, some low level speeds, or I can live without my phone. And there's only 3 major players in the phone business now. There's AT&T, there's Verizon, and there's T-Mobile, and that's it. I mean, there's spattering of other little companies, but that's your major ones that you're going to be with. So there's a huge moat that's not going anywhere for Verizon. So if you're looking at this from an income perspective, I think Verizon is great. I think Verizon was definitely like a bargain and a steal when it dropped down to the 30s and when me and Steve spoke about it. I'm not so sure in terms of return for me makes any sense right now because once I'm not looking for the dividend income from Verizon, primarily because my tax rate is so high already. And if I took on, even if they're qualified dividends that are getting paid, it's not going to really make a big increase to me in my total portfolio returns. Instead, I think a lot of the people in the Patreon, we were looking at this from the perspective of how much could we actually get in terms of a options return by doing a spread on Verizon when it was clearly massively undervalued relative to the safety it could provide to a lot of people looking for yield. And as interest rates go down, Verizon's upper level value proposition is actually kind of growing a little bit. So it made a lot of sense because we were able to get in at such a low debit price. So for me, whenever I look at these income producing assets or companies that have income producing ability, I look at the relative difference between what you can get in the open market from the treasury market and weigh that against the current value of the stock and say, look, if interest rates went down by, let's say, 300 or 400 basis points next year or the year after that, what would be the value of this stock going forward? And it's really, really interesting how well they correlate. So as the Federal Reserve lowers interest rates, people are going to say, well, I need to get it. I'm used to a 4.5%, 5% yield on my money. Where else can I get that? Oh, I can get it by being invested in Verizon. So let me buy Verizon stock, which is going to put Verizon higher and higher. So just, FYI, that's one of the ways to really play these options. These dividend players, where if you think that the future interest rates are going to come down, that means that now the value of these income producers is going to go up.
So Chris, or Steve, this goes back to your point. You were telling me privately, you said that you think value might be a big play in 2025. Do you agree with Chris that if interest rates come down, people are going to look at Verizon and think that, hey, at least I can get a 5% yield from here?
Yeah, look, I said it for a while now, publicly and privately, that I think the value trade is going to get more exciting next year as we see a broad market rally. I think tech's going to continue to go up, but you have $6.5 trillion in money markets. The Fed has already chopped 75 bips off the rate, probably going to chop another 25 basis points off the rate in December. They're likely going to 3.5% in 2025, 3% terminal rate or neutral rate in 2026 and forward. All the people that were in T-bill and chill have gotten wrecked in the market. The S&P left everybody behind that did that. And most people, as we can see from the St. Louis Fed chart, have not gone back into the market with that cash that was on the sideline. Some of that cash will always remain on the sideline because people like cash. But a lot of people saw these rates, and that does not include CDs or T-bills, and said, man, I can get 4 or 5%. Wait for the volatility to leave. Let me do that. At some point, when that gets under 4%, I think that's the magic number where it becomes less enticing. That money's going to have to go somewhere. And if they've been sitting on the sidelines, they don't necessarily care about capital appreciation. They want that income. And I think they're going to be looking for companies that trade at a low PE, that have an income rate that meets or exceeds the risk-free rate of return. And companies like Verizon could catch a bid. Companies like Target could catch a bid. Companies like Altria Group, AT&T.
Is there anything specific you like about Verizon, Steve?
Right now it's more utility. I think of Verizon as a utility company. The big threat is Starlink, like Chris said. And that's really going to be an FTC thing. And it's going to be how much Trump allows Musk to grow. Because right now, Verizon, AT&T, and T-Mobile are protected. But if things change, Starlink could become a huge factor. And you could see a lot of people switch their service. I don't know what's going to happen. But right now, I like Verizon. Trades at a low PE, has good yield. But I think that there's a lot of companies that are going to become very interesting. I think companies like Cisco will become interesting. People love to hate on Cisco for some reason, but they're a company that's raised the dividend for more than 10 years. They have a 3% dividend yield, huge free cash flow, still a company that's growing and buying back a ton of shares. So I think you'll see value do well. Nobody thought IBM was going to do anything, and IBM completely changed their business, went more cloud-based and consulting rather than legacy infrastructure, and it's at the highest it's been in 10 years. And everybody thought that was a dead company. So I do think that there's a good value play going forward.
One thing to add is, when it comes to a lot of the players, when it comes to dividends and stuff, they typically have a lot of debt on the balance sheet because that's how they usually make their money, right? They take on a lot of capital. They do a lot of capital projects. Then they have these contracts that go into like the years, if not decades. But the thing is, they pay down that debt over a long period of time. And the thing is, what they're paying you as a dividend is a difference between what the cost of capital is for them and then the profit that they're able to generate from that. So the key here, another tailwind for a lot of the companies that Steve is talking about is cost of capital. If interest rates come down, not only is the dividend more attractive, but also the money that these guys have to pay on their existing debt starts to come down significantly also. So the thing is, like some of the companies, they have fixed rate debt that's low interest debt for the next 10 years. Those are very interesting place to look at. But the real value is in companies that have floating rate debt who've experienced massive drops in net income, primarily from higher rates, that when rates come down, actually act like a tailwind. I'll give you guys an example. You got something like Carnival Cruise Lines, right? When COVID happened, everyone had to load up on a crap ton of debt. Carnival, prior to COVID, was very, very cash flow accretive. What they were able to do is now they took on a lot of debt in order to survive COVID, but now they're utilizing that additional cash flow to pay down their existing debt. And then on top of it, what ends up happening as interest rates come down, they're able to refinance some of that debt to even lower amounts, thereby increasing profitability. And there's also look in 2025, 2027 to issuing the dividend again, just like what Royal Caribbean did. And look at where Royal Caribbean is now. So I think a lot of times, the thing is, everyone here, they typically invest based on pure equity, but there's also a huge thing to look at when it comes to the credit markets. If you understand the credit markets and how short-term and medium-term treasuries, how those end up impacting companies and their profitability, you can actually find out how these companies can actually be really, really good investments and do it in a very, very safe way. In my opinion, COVID and all the high interest, like all the inflation, was a gift to anyone who's a dividend investor. Why? Because it pushed up how much people expected on yields, and that pushed down the value of a lot of stocks. The good thing is, if you were smart enough, you bought a lot of these value plays, and now you're benefiting from this lower inflation environment and hopefully in the future, lower interest rates. And that should propel your investments much higher. So, yeah.
Okay.
Yeah. And
ahead,
what Chris said, in addition to floating rate debt, when rates come down, companies will be able to issue debt at cheaper rates and buy back their higher yielding debt and save on their interest expenses, which drops right to the bottom line. So there are several factors over the next couple of years that would make companies like Verizon, who have massive amounts of debt on the balance sheet, very attractive.
Okay. I agree with Austin's comment here. Insurance as a dividend play. Let's start with Steve first. Steve, what's your philosophy on insurance as a dividend play?
I stay away. You never know what's going to happen. Don't like the insurance sector. It is a cash cow, but you never know what is going to happen with natural disasters, how they're going to have to pay things out, something that's too unpredictable for me.
So Buffett is in Chubb and he owns Geico, right? Buffett loves insurance. You have a different philosophy, it seems like.
I mean, you're forgetting the biggest one, Berkshire Hathaway.
Yeah, that's what I mean. Yeah. Well, we'll talk about Berkshire, but insurance names isolated.
No, but that's an insurance company.
Okay, so would you buy Berkshire for the insurance?
Well, it doesn't have a dividend, one, so it's not applicable to this conversation. Two, Berkshire is the largest conglomerate holding company there is. It's a great company. I just don't like insurance for the simple fact that you never know what the payout schedule is going to be, and you just don't know what's going to happen. Look at all the hurricanes we've been having. You have no idea what is going to happen with it. It is a great business, too unpredictable. I think there's easier ways to make money.
Chris, your thoughts on insurance plays?
There's certain sectors of the insurance game that I like, but I'm kind of with Steve in that if you're looking at like property or casualty or even auto, there's massive amounts of, how do I say, like risk that you take on from God level events that could theoretically screw you over a couple of quarters here and there. And so a lot of analysis when it comes to insurance is all based on actuarial sciences. And I'm too dumb to figure out how to make sure I can play this out. So like I said, I will stick to things that are a lot easier for me to comprehend, and insurance is just not one of them.
Let's talk about real estate.
On the other hand, there is one sector of the insurance market that me and you, Steve, we will look at together, and that's private mortgage insurance. That's something that we should take a look at. But other property, casualty, all that shit, let's like what is a health insurance? I'm good. I can live without dealing with that kind of agita.
Yeah, I agree. I deal with it all day, every day. I don't want to deal with it in my investments.
All right, so let's go to real estate. What are you thinking around that, Steve?
I mean, I think it's going to be a really good sector for the next couple of years. And you had one of my favorite companies on the screen, Realty Income. I think Chris and I differ on this because of some headwinds potentially from some of their underlying tenants. But overall, this is an amazing company that has built one of the largest commercial real estate footprints. They have paid, or they have declared, 653 monthly dividends. They have provided 108 quarterly dividend increases. I'm going to bring up their latest investor deck because it is absolutely impressive. I think that the occupancy rate 98.8% or something like that. And this is just a company where you're going to get a monthly dividend. It is currently at a 5.5% yield. It's just a phenomenal company. Commercial real estate's not going anywhere. Your e-commerce is still less than 20% of total sales. And you're always going to need this footprint. For me, Simon Property Group was my favorite. It's no longer because of how much it's run. It's still very good, but I think there's value in Realty Income. I think there's value in CTO Realty Growth. And look, Realty Income has $26 billion in debt. Same thing Chris and I just talked about. As rates come down, they're going to be able to refi that debt. They're going to be able to drop more to the bottom line. They have to pay 90% out to shareholders to keep the REIT status. It is just a very well-run company. Chris, I don't know how you feel about it.
You'd rather have Realty over Simon?
Right now, yeah, because I think Simon doesn't have as much upside potential as Realty Income, and it's a little bit less of a yield. But Realty Income's been trading off. I think it can go back to 65 or 70 next year as rates go down. I just don't know how much more Simon's got in the tank to go up, but I'm certainly not selling Simon. They keep raising the dividend, and it's just a great company.
Chris, your thoughts on real estate as a dividend strategy?
I like it. Me and Steve did very well on SL Green. And believe it or not, all the props and kudos should be going to Steve, not me when it comes to SL Green. I still remember the day that he came. He's like, look at SL Green. And I said, sure, let me take a look. And we both analyzed this thing together. But let me tell you, that was probably one of the best plays you could have made in 2023 and 2024. And I know people on here who did buy it. Congratulations. That was like, if you're not following Steve, because he gives golden nuggets on his Seeking Alpha, I highly encourage you to get it. It's, if you want to do the free version, do the free version. But that is $300. I don't think anyone is going to regret spending, especially if you're getting access to the level of DD that you get with Steven. And you can find him on Seeking Alpha under Steven Fiorello. Definitely check that out. But when it comes to real estate right now, I think that there's still opportunity in some commercial real estate plays, particularly in office. I'm not so sure I'm a big fan of retail or malls for the most part. There are different asset classes among real estate that I still think are very undervalued that provide a really good return right now. So as an example, if you were on my Patreon, I've spoken about Brookfield preferred shares. Those have been great returns in both capital appreciation and in dividend appreciation. By the way, they just declared their quarterly dividend. So anyone holding on those Brookfield preferreds, we're getting paid out on January 1st or January 2nd.
That's BPYPN, right?
BPYPM, BPYPN, BPYPO, BPYPP. They have a bunch of preferred shares. There's a lot of them for Vornado too. So me and Steve, we've gone back and forth about Vornado. We've gone back about SL Green. I'm not sure we spoke about Boston Property Group, but commercial real estate, in my opinion, is going to start to come back. They're going to benefit from two.
So wasn't the narrative in 2023 commercial real estate could create the next 2008?
Exactly. A lot of people were dumb. They didn't fucking realize what the value in all of this stuff was, because what ended up happening was they didn't. So a lot of people thought, well, all of these banks are going to default and commercial real estate is going to default with them. Me and Steve, I think we spoke about it, that no bank is going to want to take ownership of a $500 million building and try to sell it in the open market. Because at that point, they'll take on probably a 50% loss on assets. So what they did was they did something called pretend and extend. And the strategy is actually working out beautifully, because what's happening is a lot of these real estate owners, now their vacancies are starting to shrink. So their cash flows are returning. On top of it, interest rates are coming down, which meant that the banks have a good time refinancing some of that debt at lower rates in the future. So a lot of the debt that came due, like let's say you owned a $100 million building in Manhattan, and basically the real estate company, came to you and said, look, either you extend my current preferable rate, or I'll just hand the keys back to you. A lot of them said, fine, keep the rate that you have. We'll just keep it on the books as a non-operating, as almost like a phantom loss, because I don't want to get too technical with my jargon. But it ended up working out well, especially for trophy tier buildings. This doesn't mean that all commercial real estate is created equally. If you've got like a strip mall in the middle of nowhere or an office building in like a third tier city, those are going to default. I can tell you right now, no one is trying to buy those things. Even if you were willing to give them up, people will be like, no, I'm good. But when it comes to Class A real estate in Manhattan, in Los Angeles, in San Francisco, in Boston, that is where you should be looking, because that is where all the money resides. Look at New York right now, New York City. Office vacancy rates are starting to come down significantly. It's not reported in the media like it was when everything was going down, because now they got a whole bunch of egg on their face. But you know who doesn't have egg on their face? Me and Steve, because we caught SL Green when that shit was $20 and now it's $80.
Steve, thoughts about SLG and real estate and commercial real estate?
I mean, yeah, one of the things that I said to the two of you when we were doing the due diligence is I'm in Midtown 3-4 days a week, and I was seeing it get busier and busier, even if my building didn't have the throughput that it used to pre-pandemic. But everybody still had their office space. They just weren't coming to the office. So the bills were getting paid. So I went on the New York City Comptroller report. I looked at what the Palantir 67, that's insane. I looked at their subway rides and where it was, and then I correlated from them doing roughly 3 days a week in the office to what it was pre-pandemic. And when you account for the 2 days loss, it was roughly the same rate. So I'm like, okay, there's still roughly the same amount of people coming into the city based on a 3-day work week rather than a 5-day work week. I'm seeing more foot traffic on the streets and everything. And I know that even though people aren't coming into my building, they still have all the space leased. So I started looking at the two biggest, Vornado and SL Green. And I thought SL Green was a better deal at that point because the book value at the time was around 65 or 67. And it started trading at 30. And then it kept going down. So we were buying it. And I still have it. And it was a phenomenal investment. And then
Are there other commercial real estate
malls,
things that we need to look at, or different commercial real estate places?
the easy money is made. There is no more easy money to be made right now. It is just looking for quality investments, and you'll do okay, but you're certainly not going to get the deals that you had when everybody was worried about the financial crisis happening again. And Chris is right. I mean, look, these banks, the big narrative was office is going to go down. Banks are going to have these assets on their books. They're going to have to sell them for pennies on the dollars because they're not going to be able to operate them, and it could cause them to fail. That's why you had the regional banking crisis. And that did not happen. People went back to work, the world went back to normal, and Class A real estate is great. And one of the things I think is going to happen, I think that in Manhattan, places like Manhattan, you have two main points of entry if you're taking mass transit, Penn Station and Grand Central. You have the subways, you have Amtrak, and you have the LIRR, Long Island Railroad. You also have Metro North and the Path. Everything converges there. I don't think people want to go downtown anymore. I don't think people really want to go to the financial district. And when they get into one of those two major hubs, get on subways and take another 25 minutes to get to the office, if not longer. I think people really want midtown real estate, and those values are going to keep going up. I think the SL Green and Vernado can still go up. It's just not going to be the way that it used to. But you can still do well. And then for malls, look, I was in e-commerce at Bed Bath & Beyond. Okay. I can tell you that almost every other meeting I was in was, how do we compete with Amazon? I was there when they were a $75 billion company, when they were really Bed Bath, not a show what they were. And I've been hearing that malls are dead, malls are dead, malls are dead. It's the same thing with Class A real estate. Class A malls are great. Amit, bring up a chart at SPG, Simon Property Group. It's at 184 or so right now. This thing was trading under 100. And Chris, you know Roosevelt Field Mall. Nobody's replicating that. And their properties are the creme de la creme. They're the best in the country. And malls are not just a shopping experience. Malls are destination experiences, movie theaters, gyms, restaurants. People want experiences. People are not staying home on a computer all day long and not going out. So while Class B and Class C malls are going to be difficult to operate, Class A malls are going to continue to do well. And Simon Property Group could keep going up. I really like them. I would even consider them in the dividend portfolio because dividend keeps going up. It's back to where it was.
Right. Austin, thank you for the $20 super chat. Really appreciate that. Thank you all for your hard work, Amit and Steve, Chris, TJ, etc. I'm a firm believer iron sharpens iron, and that the confluence of thoughts allows us all to make our best decisions for our own journeys. Yeah, I agree. And it's really nice to have this community together to try to crowdsource all of this information. So thank you for that, Austin. Really appreciate it. So we talked about insurance. We talked about real estate. Hold on, Chris, you have some other thoughts on real estate? Go ahead.
Yeah, no, what me and Steve are trying to do is get Amit to convert some of his gains into dividend plays so that this way, in the future, when all his Palantir gains disappear, he'll still have his income coming in. That's what we're all trying to do. We're like, listen, you had a good run. Protect yourself. Get you some of that income. And one thing I just want to mention, and then I got to actually get out of here, but getting a fixed source of income, whether that be a monthly, a quarterly basis, there's a level of investment that you can go in with the rest of your money that you can't if you're basically invested in the market and you have nothing coming in. All right. I find it that people tend to make the worst mistakes when they don't have positive income coming in, because what ends up happening now is that you're staring at your computer screen looking for any sort of yield potential by doing X, Y, and Z. As an example, and I don't mean this in a derogatory way, some people will try to do covered calls and use that as income strategy, but they end up getting burned because they lose out on so much capital appreciation on companies that they actually like. So we have friends right now that sold covered calls on things that if they had just had some income producing assets on the side that kept giving them dividends, they wouldn't need to do this covered call up and down stuff. They could just say, oh, well, I've got income coming in, whatever. I can leave this portion of my portfolio for nothing but capital appreciation. And they would have absolutely killed it. So very similar. And I'm sure Steve, that's one of the best things that Steve said, I hope everyone listened, was he has two segments of his portfolio. He's got that capital return portfolio that's going to be all about capital appreciation. But then there's another part that's all about income. And he's okay with the income not producing as much total return, but it gives him this peace of mind, just like my investments give me a peace of mind that I have fixed income coming in. So let's say I lost my job tomorrow and I have a mortgage payment coming. I'm not looking to sell any of my my long-term stocks to pay for my mortgage, you know? So one day, Amit, I hope you have $10,000 to $20,000 of passive income coming in, so that let's say you have a bad year in the market, because trust me, everyone, there was always going to be a year where there is a bad year or 2 years. And the last thing you want to do is have to sell things when everything is down to pay your bills. You know, you want to make sure you've got income coming in that you can, you know, use to pay your stuff, and also any excess income, you can direct that dividend income into the capital appreciation part. Does that make sense?
Yeah, no, that makes a lot of sense.
It's really important what you said. And also thinking about it, you don't necessarily have to reinvest every dividend. If you need the income, you can turn the drip off and just take it as cash. And having that residual income coming in for part of your portfolio, for me, is very important because it gives me peace of mind. And if I decide that I want to utilize that income to make other investments, I can turn the drip off, take it as cash, and make investments in something else without having to take money out of my pocket to invest. So there's all different ways you can utilize an income producing portfolio.
All right, Chris. Appreciate you, brother. Thank you for joining.
One last thing before I go, and I'll let Steve finish the thought. Be careful of dividend frauds, okay? This TSLY, that shit is a dividend fraud. Just like a lot of these yield max bullshit fucking ETFs. Be careful.
What exactly is a yield max ETF? Because someone did ask about that. So can you explain it?
That is a garbage product. All right. If that is one of the worst things I've ever seen in my life, because all they're doing is basically they're attracted by the face value of that dividend, but they don't realize that from a capital standpoint, they're actually losing a crap ton of money.
Wait, hold on. So this is an ETF that just sells covered calls on Tesla, right?
That's what no.
Yes. All of these yield max bullshit ones. Steve, go ahead. You trash these people just like I just did. I'll talk to you later. Bye.
See you, Chris.
I have to actually read and see if what I'm about to say is correct, but I'm 98% sure what I'm about to say is correct, so I have no problem saying it. I believe that they don't even own the Tesla shares. They're creating a synthetic ownership through different call options that they're purchasing, and then they write options against it to generate a super high yield. But it continues. Just do a chart TSLY versus TSLA and look at the capital appreciation. Tesla has gone up, whereas the yield max has gone down because of the way that the fund is constructed.
Oh, wow.
It's not actually owning Tesla and writing a covered call on it. They're creating synthetic ownership, I believe, through a series of things that they're buying. And it's not good.
Yeah, that is not the best. Okay, so yeah, some of those you definitely want to be cautious of given how they're operating. We'll talk about covered called income ETFs.
Yeah, do you mind if I show you two charts and then we move to business development corporations and some covered call ETFs that are good?
Yeah, one quick before the chart. I was just going to ask real quick your thoughts on financials as a dividend asset, like banks. Is that a good place to be in?
Great companies. I like Citigroup. I think Citigroup's interesting. I think Citigroup's undervalued. Still do. Has a 3.5%, 3.25 dividend. Book value is 100. It's trading around 68 or so. So I mean, or it's up to 70. Great. I mean,
so that's your bank if you would have to pick one for 2025 as like a good.
Yeah, I mean, I'm in Citibank or Citigroup right now. I think there's still meat on the bone. Good dividend. I mean, Morgan Stanley and Goldman were phenomenal buys. Morgan Stanley's run from like 80 to 130 or something like that.
Yeah, I'm afraid of buying these because they're at all-time highs right now, these banks. And
they're going to keep doing good. The new administration is going to be very good for financials, I think, because you're going to have an economy where you have lower rates. There's going to be more loan origination. You have more M&A activity. I think these companies are going to do very good. I just think that they've gone up so much that the easy money's made.
That's what I think too. I agree. Yeah.
So I just want to give people two real life examples. So every Thursday, I write a dividend series article on Seeking Alpha. I started this account with $100 and I put $100 a week in. I just want to show one table, one chart. So these are the top 10 holdings. Can you actually see this?
Yeah. So Altria, SLG, Enbridge, Verizon, Reality Income, JEPI, JEPQ,
Yeah.
Simon, AT&T, and what's TWD?
Starwood.
Oh, Starwood.
Starwood Property Group. Property Trust. So Altria Group, number one company in here. I purchased 18 shares over the past 195 weeks. Initial investment, $801. My price per share is 44 to 56, almost 57. This says generate $138 of dividend income, which has been reinvested. 17.21% of my initial investment has been generated through dividends. It has given me just over 3 new shares and increased my forward income. My forward dividend income from this position alone is $85.73. Now, I get it, not a huge amount of money. But once again, started this with $100, put $100 a week in. I put $19,500 into this account over the past 195 weeks. Portfolio value last week was almost $25,000, and it has a forward dividend yield of about 7.5%. Now, when I look at the dividend income going forward, in week one, when I invested that first $100, this was only producing $7.17 on a forward annual basis. It is now generating over $1,860 in forward dividend income.
But
And
if you sell one MicroStrategy put, you can make $1,800 in a week.
yeah, great. I can do that too.
I'm just saying, yeah. I'm just being, I'm just
Right,
put it
but
out
it's
there.
not like I can't
wild,
do
right?
both.
Dividend income adds up over time, whereas
Right.
riskier stuff is in a day.
But right now, when I look at this, my projection is this portfolio is now going to generate $155 on average per month. And every week it goes up because I keep buying and adding in. And if I do this for 20, 30 years, this is a completely separate account outside of my normal dividend account that I started this series on because everybody was saying dividend, you can't make dividends work for you without a tremendous amount of capital. I'm like, well, no, you do it over time. You absolutely can. And this account could be generating 20 or 30 grand when it's said and done in annual dividend income by the time I retire. In addition to
this is one of those things where obviously it's going to underperform. You're going to feel a little bit of FOMO, but if it's legit in a separate account and you're going to wake up at 65 and then take a look at it and you're making $5,000 a month off of it, I mean, that's a pretty damn good deal when you're retired.
Yeah, I mean, look, somebody, this is all public, so I have no problem showing the comments section. Somebody said to me, here we go. To be transparent, you should include that your portfolio has increased 2.78% a year. Well, that's not right. So I said, how do you figure? 195 weeks equals 3.75 years. Portfolio is up 27.82% on invested capital. 27.82% divided by 3.75 years is an annualized return, 7.42%. Like, this is not, I say it every week. I could care less about capital appreciation in this account. This is about dividend income. And, you know, the actual chart, this is doing 7.48% in forward dividend yield, and it's got 98 positions in it. I mean, this is a very diversified portfolio. And when all the Ukraine war stuff was happening and all the geopolitical tension, the blue line is invested capital, the red is portfolio. The spread during the worst time, the risk mitigation on this was insane because of my level of diversification. It went down. The worst I was ever down was 12%. And then you had companies like Amazon and Apple drawing down 30, 40, 50% during this period. So I don't think anybody should try to replicate what I'm doing on this.
How many positions? How many positions do you have in this?
98.
90. Do you think people should have that many, or should they zone in?
No, I'm not saying that anybody should or shouldn't. I'm just saying that I make it public every single thing I do in this portfolio. And for me, when I think about investing in income, it's not just about generating income, it's about risk mitigation. Because in a
Yeah.
bad market, I want to make sure that my income is spread. Because look, if something, I've had 3 positions or 4 positions in this portfolio that have cut their dividends, reduced them. Intel was a big one in the beginning. I ended up selling out of Intel in this portfolio because it no longer fit the portfolio needs. And that's why, to me, diversification is important, because something can go bad. I don't get everything right. Something can go bad, but all my other positions help make sure that I'm protected. So that's something else to think about.
Does it take a level of humility, you would say, to be a dividend investor?
You got to be very honest about your goals. But that's with any investment. Like, you have to have humility, and you have to be honest about what the objective is.
Right. So, okay, let's say, I'm just hypothetical numbers. Let's say someone has $1 million.
Yep.
What, 10%, you think? 100 grand to start off in dividends? Obviously, it's different for everybody. If you're
Everybody's
making
different.
a mock portfolio,
Everybody's
you had $1
different.
million.
It depends what your goals are. How old are you? You know, what are your goals? Are you retired? Are you not retired? Are there tax implications? What type of an account? There are so many variables that's something that everybody needs to think about for themselves, because everybody's investment goals are different. Yours are different than mine.
Yeah, I'm loading up on MicroStrategy calls for next week. So
You're a good role model.
I'm not doing that, guys. Steve's Twitter right here in the chat, his Seeking Alpha, all that stuff is there, so you can follow along the dividend portfolio every week. Okay, so Steve, we talked about financials, we talked about insurance, we talked about real estate, we talked about energy.
Let's go business development corporations.
Okay.
Because that's a sector of financials that I really like, that I think is going to do very well. The gold standard is Ares Capital, ARCC. I mean, this is a company that you're getting an 8.27% dividend.
Wait, Steve, real quick, are these like the BlackRocks of the world? What is a business development corporation?
So a business development corporation lends money or takes an equity stake in small or middle market companies. They service underserved businesses that traditionally have had a hard time getting financing from traditional banks. And there's a lot of business development corporations. My 3 favorite right now are Ares Capital, FSKKR. It is KKR's Business Development Corporation. And then Blue Owl Capital, which is through Owl Rock. I like the 3 of them. They're both in the portfolio. And big yields, they have, Maine is, I have Maine. I don't understand how they're trading where they're trading. The premium on their book value is tremendous, but Maine has been one of the best investments from any BDC. If you've been in since the beginning, it's absolutely incredible. But
So these guys could theoretically go to like a restaurant food chain and like juice them up with capital, basically.
Mhm.
But the food chain could be private. They don't have to be public, right?
Yeah, it's normally private companies.
So they can go to a coffee shop in New Jersey that's expanding locations and give them a couple $1 million, and they get a little stake in it. Okay.
And they either issue senior secured debt normally, which is my favorite, or they take an equity stake. And it is, so look, Dragos has been holding Maine for 7 years. He's been killing it because Maine continues to increase the dividend. It continues to go up. And if you're buying back shares, it's been one of the best BDC investments there is.
I love their ticker too. The ticker is Maine. I love that. And also it's up 30% this year.
Look at a 5-year chart or match.
By the way, Dragos, thank you for the for the $20 super chat. Appreciate it. Yeah, 30%.
Go max.
270.
And the amount of income that they've generated off those shares is insane.
So the one fear I have is that this year I go to any dividend stock or most of the main ones and they're up and you have the dividend. That usually doesn't happen though, right? Where they have 20, 30% plus a dividend. Like that's a special year.
Depends what type of company you're talking about. I mean,
no, but in general, that's a special year. Like 2024 is special that these stocks went up and
I don't know. I mean, look at Home Depot. Home Depot's gone up consistently. They pay a dividend. Look at Costco. Costco stock is up a lot. They pay a dividend. Same with Walmart.
That's true. That's fair. That's fair.
And look,
Yeah.
here's the big thing around dividends. I think gets a bad rap. People don't like dividends for some reason. There, you have a whole camp that would rather see companies buy back shares because they'll say it's more tax efficient.
Yeah, let's talk about that.
capital.
Where do you come on this debate? Buybacks or dividends?
Hold on. Let me finish the thought because I'm going to get to that. You have a camp that doesn't like dividends because they would rather see the capital be reinvested into the business. And then you have an entire camp that just would rather be in growth companies. My thing with dividends is you're sharing in the profitability of the company. Like you buy Pepsi or you buy Coca-Cola stock, you're participating in the earnings. You're getting paid a percentage of their earnings every quarter. To me, that should be so exciting. It's amazing why dividend investing isn't more popular. Because why wouldn't you want to be invested in a company where you're sharing in the profitability and you're getting paid from that company to be a shareholder? And it takes a much more financially stable company to provide a dividend because you have to have a multi-year plan and understanding of the financials to actually pay a dividend.
Yeah.
It's crazy that it's not more exciting to people. And the whole buyback versus dividends, I could go either way on it, but I would rather the dividend. And here's why. I guess it depends on the situation, but realistically, just because a company buys back shares does not mean the company is going to go up in value. Look at PayPal. How long? I mean, they're still way off their all-time highs. Look at Cisco. Look at Target. I mean, there are so many companies that bought back shares and the stock has not reflected those buybacks. Cisco's a perfect one. Cisco may be up this year. They still, since 2000, have never reached their all-time highs. And the company is a much better company now than it was, generates 4 times the profits. I don't remember how many times the revenue, bought back more than 30, 40% of the company over the years. It's crazy. I mean, the dividend is earnings that you can either take and reinvest into the company or take as cash and do something else with. Like
So Google gives you 50 cents a share. Would you rather them use that $2 billion to buy back their stock?
So at that point, Alphabet is a much different company because they're generating 50, 60, 70 billion dollars in free cash flow a year. They have more than enough firepower with basically no debt to do both. And they have a huge buyback program. They're starting a dividend. They'll become a dividend growth company over the next decade. But I don't have a problem with them doing either. But like a company like Coca-Cola, I would rather see them pay the dividend than do massive buybacks.
Right. Yeah, Google's one I'm really interested in if it stays in this 160 range in 2025.
It's the most undervalued big tech stock there is.
It's stupid. It gets stupid and stupider every time I think of the valuation. Okay,
It's
so
like 17 times 2026 earnings. Like really?
Like
really? It's crazy.
Yeah. Perplexity would legit have to like sizably take their lunch in the next 2 years for it to get hammered, and I don't think that's happening.
How about this? Everybody is making all these assumptions. How about the assumption that a company making what? I don't want to give a bad number. I'm going to bring up their exact free cash flow. Just give me 1 sec. So I have it. I just got to go into a different tab. This company is generating $55.8 billion in free cash flow because they've increased their capex, but they're doing $105 billion in cash from operations. Okay. If anybody thinks that they're going to let ChatGPT or Perplexity or one of these companies encroach on their profitability without putting up a fight, they're crazy. Yeah. Alphabet is going to put up a fight. They're going to figure it out. Not to mention, there's nowhere else to advertise. Meta platforms and Alphabet are the only places to advertise. Not only does Alphabet have search, they have YouTube. So let's really think about that. And then you got Google Cloud, which is gaining more than people thought they would on AWS and Azure. So I'm not worried about Alphabet.
Yeah. Okay, so we talked about business development corporations. We talked about financials, talked about real estate, talked about insurance, talked about energy. Let's talk about some names that are kind of out there as popular stocks that have a dividend that might have some appreciation. So Nike, thoughts on that in 2025?
Yeah, I mean, I wrote an article this morning based on a conversation Min and I had the other day about Target and Nike. I'm coming around on it. I was in the camp, I'll never own Nike. I dislike the stock, et cetera, et cetera. Really started looking into it, and it actually looks pretty interesting. They got like 35% EPS growth over the next 2 years. Just increased the dividend, quarterly dividend, by 8.1%. Very little debt, good balance sheet. I think that it is a diamond in the rough. May take a little bit, but can definitely get over 100 again. Target looks really interesting also. We'll see.
I can't believe you wrote an article already, dude. Like that's
Did you see the title of it?
No, what's the title? What's the title?
Oh, the title's heroic. Shopping for value on Black Friday.
Shopping for value on Black Friday?
Yeah.
It's a Nike article only, or there's other stuff?
Nike and Target.
Oh, I like that. Shopping for value on Black Friday, Nike and Target.
But I'm not shopping at the stores. I'm buying the companies.
Yeah, because you're an investor. I love it.
Yeah, I mean, it's
a good one. It's a really good one.
Let's show the chart that you and I did. I actually color-coded it. Hold on. This is why Target's interesting. I know people are getting bad on Target right now, but Min and I looked at the numbers, and they're pretty interesting.
It's more than interesting. It's just we were trying to sell covered calls on it. The premiums are not amazing.
Well, don't say we. You were trying to.
Yeah, I was trying to.
So yeah, that's the title: Shopping for Value on Black Friday.
Also, I kind of made it into the article because I helped make this chart. Right.
Well, you made me make the chart.
Yeah, I was looking at you filling the numbers. I think I told you what the free cash flow was of one of these companies.
Mick calls me and he's like, yo, we should look at Target. I'm like, all right, fucking send me a Zoom invite. Let's just do the numbers right now. But look, retail is a razor thin margin, but you look at Target's margins versus Walmart and Costco. Margins are all better. You don't have as much on the 2-year growth rate for EPS, but this is a company that's still growing. And their price to free cash flow is a fraction of Walmart and Costco. Their price to earnings is a fraction. And the dividend yield is more than triple Walmart. I mean, it's just, unless you think Target is going out of business or is in for 5 bad years, it is very interesting here.
So they sold off because of the EPS miss. Do you think
EPS and revenue miss? Yeah.
Do you think
that can be fixed?
That's
Over inventory, bad ordering doesn't matter in the long run. It's a quarter, 2-quarter, 3-quarter headwind. Look, Target is in places Walmart isn't. I think about where the Walmarts are near me and where the Targets are. And they serve different demographics. And I don't think that Target is in danger of going under. This is a company that's been paying a dividend for 56 years. Like, they've gone through cycles like this. I'm just not worried about it.
Also, Target tends to trade in the 160s, and then whenever they miss, they tank really badly, but they come back within a couple quarters. So
yeah, I'm not too worried about it.
Yeah,
but let's talk about something interesting. There are ETFs that I've been adding to the dividend harvesting portfolio that are very interesting. And one of my favorites right now is SPYI from the Neos Group. So what they do is they invest in the S&P 500 companies. They write call options. They take a percentage of the premium and then buy out of the money call options. So if the market rips, you still participate in the upside rather than being completely capped the way XYLD from Global X is. And the dividend yield or distribution yield, because it's a distribution, not a dividend, I think it's, hold on, SPY.
Adam saying, please don't talk about them. This is my secret.
Well,
Steve introduced me to these guys too. I didn't know too much about them.
Right now, the forward yield's 11.67%. And over the past year, the fund is up 8.5% because it's uncapped. So yeah, it's underperforming the market, but if you want that monthly distribution, and if you think the markets are going to go up and you want some exposure to the upside, these ETFs are structured to do exactly that. Also, JEP-P and JEP-Q, JEP-E and JEP-Q from JP Morgan are great also. I mean, the difference is that they're taking 20% of their net asset value. They're investing in exchange-linked notes, and they're running a cover call overlay strategy through the ELNs and leaving the other 80% of the fund uncapped. JEP-Q's probably the best performer out of these right now on the year. From the last time I looked at them, it's up 14.3% over the past year or year to date, and the dividend yield's 9.34% on JEP-Q.
So to get it straight, these guys will go to the S&P 500. They're gonna buy it at 600. They're gonna do a cover call at 605, but they're also gonna buy options to 610 because if it goes above 605, they have to sell the shares, but they still get the upside from the call option. And all of that culminates into a dividend.
Yeah, they're taking percentage of the dividend, paying it as the distribution, or taking a percentage of the premium, paying it as distribution, and using the retained to buy out of the money cover calls above where they sold them at to participate in upside.
And
they're just using a call credit strategy. That's all they're doing.
Is there any fear to that strategy at all, or how do you think of the strategy?
I mean, there's always risk. If the market goes down, that's fund's going to go down. There's no insurance baked in. They're not running a put strategy, but it's basically going to trade with the market. Market goes down, it's going to go down. Market goes up, it'll go up a little bit, but you're getting that distribution every month. It's very interesting.
And that dividend's like 9% a year, right?
11.5.
That's not horrible.
It's huge.
That's not horrible. That's really good. And Adam says Neos is tax incentivized as well in terms of how they do their trading.
Yeah, I really suggest going to their website. It's one of the smaller investment houses with products that I really like at the moment. I think they make really good products.
What about this argument that in bear markets, there would be NAV erosion on these types of funds?
In bear markets, there's capital appreciation erosion across the market, so it doesn't matter.
That's true.
I mean, the difference is if you're in one of the Global X funds that's fully capped, it may take years to get back to your purchase price because they do the monthly cover call on the market at the money. So they really limit the upside. At least with these, they are uncapped to a degree. So once again, it goes back to my original statement. You have to be willing to forego capital appreciation.
Right. Someone says, will the SPYI distributions be taxable if held in IRAs? I don't think anything is taxable if it's in.
Ask an accountant.
Yeah, you had to ask an accountant, but from my understanding, well, Steve, in general, if you get a dividend in a Roth account,
ask an accountant. Your best bet is to talk to a CPA and understand what is applicable and what is not applicable.
Okay, there we go.
Don't give tax advice.
No, I'm not going to. I'm just curious if you get a dividend in a Roth
IRA.
IRA.
You can Google it. You go ChatGPT, but I would ask an accountant.
All right, well, let's ask right now. Are dividends in a Roth IRA tax? I would imagine they're not. In a Roth IRA, dividends are not taxed as long as they remain within the account. Okay, so that's what I thought. But in general, yeah, you want to talk to your accountant to officially figure it out.
Yeah, that's my standard answer. Talk to an accountant.
Yeah. Okay, so talk to an AI about it. Okay, so I want to hit you with some dividend names. We're coming up towards the end of the stream, guys. Hopefully you guys enjoyed. We talked about real estate, financials, energy, the philosophy around dividends, business development corporations, and some value names right now. Let me throw some other ones at you, Steven, and see what you think about them. Cheesecake Factory. K-A-K-E.
No, don't even put it in. Don't care.
Why?
Because I don't care. I'm not looking at Cheesecake Factory.
Okay. I guess we will never get your thoughts on that. Coca-Cola.
Love it. Own it. Own it forever. I actually bought my wife a physical share of it, and she gets a check in the mail every quarter from them. It was more a gag gift because she really likes Coca-Cola. So I think it's
Would
funny that they actually send her a physical check every quarter.
do you like this as a dividend play?
Yeah, I
per
love
se?
Coca-Cola. How can you not like Coca-Cola?
It's in your portfolio, I imagine.
It is.
Okay. All right. So you have Coca-Cola, Cheesecake Factory. There was a couple others in the chat. If you guys have any in the chat, let me know. But there was,
How about Cisco? Why does everybody hate Cisco?
oh yeah, Cisco. What do you think about Cisco?
I like it. I mean, what's Cisco doing over the past year? They're up this year. They break 60 yet?
No.
59.47. I mean, they're breaking out right now. Dividend is under 3% because of how much they've gone up. But I mean, this is a company that just freaking keeps going up. And they're nowhere near their all-time highs.
What about Smith and Western?
I mean,
What's the ticker symbol on that?
hard to be bearish on them.
SWBI. I didn't even know they were public. They have a 4% divvy. Year to date, they're up 1%. Past 5 years, they're up 100%.
Yeah, I mean,
So
look,
guns.
it's a business that's not going away. The U.S. loves guns. I mean, I just don't. Here's the thing: I don't know how many new gun owners there are going to be, and how many gun owners are going to keep buying more guns. Because how many guns do you really need? Some people will say unlimited. Some people would say one. Some people will say 5. So I don't know. I think it's interesting, but I just don't know where the upside is because states have different laws, et cetera, et cetera. So I don't know. But
What do you
from
think
a
about
dividend
3M?
aspect, it's interesting.
3M.
I like 3M.
They
I
have a
think
2%
the
return.
stuff is overblown about the lawsuits. I've written about it quite extensively. So
Okay, what about TD Bank?
I haven't looked at them in a while. I like BNS more. Last time I looked at it, Bank of Nova Scotia.
Gotcha.
Bank of Nova Scotia has a 5.3% dividend.
Yeah, okay, that's fair. Okay, this other one that's also interesting is Merck, MRK.
Look, I'm a Bristol Myers person. I was trying to get a mid and Chris on that at 40 something. I think like 40. I don't know when. Hold on. Let's see when I started going bullish on them.
Merck has a 3% dividend as well.
I don't know enough about them. I think that the industry is going to be difficult for a little bit, but I started getting really bullish on Bristol Myers when the street misunderstood their quarter in June of 2024, and it's up 41% since then, and the market's up 14%.
Not bad.
Because they thought that they missed earnings because the business was doing bad, but it's because they took a write down on acquisitions. And if you look at the chart, it bottomed out like I said it would, and it just spiked.
What do you think about T-Mobile?
No. AT&T or Verizon, I'm not a T-Mobile person.
T-Mobile's divvy is 1.43%. What about the railroad companies like CPKC?
They're not exciting to me.
Canadian Pacific.
There's too much competition. There's too many logistical companies. It's just not exciting.
Okay. Vodafone, any thoughts on that?
Man, that's been around for so long. Yeah, I don't know. I don't really follow them. I believe it's a European telecom company.
Yeah, they have an 8% divvy, but they are from Europe. What about Alliance Bernstein?
Yeah, somebody asked me to look into them. I started looking into them. I haven't finished looking into them, so I don't have an opinion at the moment, but somebody who I really expect really likes them a lot. So I need to do more work on it.
They're up 18% year to date. They have a 8% dividend, and Nancy Pelosi owns them as well. It's one of our top positions.
We're going into a really good environment for that type of business, so it's interesting.
Okay, Costco, just for the special divvy. I think it's like $1.54 a share or something.
Costco is so overvalued, in my opinion, that I can't get behind it.
There's no way you could
at this valuation, I can't get behind it.
Okay. No Costco. RGTI. Oh, Riggedy. This one, guys, is still penny stock territory. Yeah. $500 million. They're up another 24% today, but they've had a big run since last week at 36 cents. Steve, another quantum computing name that's like 10x in a week. It's a lot of these names are getting it. What about Meta as a dividend play?
I mean, I don't know if you buy Meta as a dividend play, but I mean, I think Meta can go to 700 or 800. I think Meta is very undervalued here.
But you don't care about the dividend.
Not that I don't care about it. It's just not something that's going to generate a ton of income. So it's more, this is something where they're doing a lot of buybacks, they're doing the dividend. I think it's more a capital appreciation play.
Whirlpool, any thoughts on that?
Never really looked into them.
Okay. And then, I mean, finally Walgreens, but I think I already know your thoughts on Walgreens.
Yeah, I mean, I have it in the portfolio, very small position. I mean, I don't know. I got to look at it again. I may have to get out of it, take a loss on it, or just let it ride. It's not a big position. Can they come back? I think there's a place for them, but I don't know.
What about Kraft Heinz? Do you like this one or no?
I do.
But this one's been dead for a while, right?
For a while.
Like Buffett really picked this one to go long on, and this one didn't really perform as well.
Yeah, I mean, 5% dividend from them. I mean, are they really going away? I mean, really think about that. They're not. 26 billion revenue, gross profit of 9 billion, horrible margins. I mean,
like bad margins, yeah.
They generated in the past year almost 14 or 1.4 billion in net income. But the bottom line with them is that their long-term debt has come down. They've gone from 29 billion in 2016 to 19 billion. They're paying back debt. You have a book value on the company of 39. So if you strip goodwill out, book value becomes horrible. But with the goodwill on the book value, Kraft Heinz is trading under book. Their free cash flow is, what is it? 3 billion a year. So it's definitely interesting. And are we really going to say that Heinz ketchup and Kraft macaroni and cheese are going away? No.
Okay. That is fair.
I just don't know. But once again, can't look at these as capital appreciation because nothing's going to grab headlines like NVIDIA, Palantir, that type of stuff.
What about Starbucks as a divvy play?
I mean, they just had a bad year, but I like Starbucks long term. But I mean, Starbucks is a much different thing. So I see when I used to, so I stopped drinking coffee for the past 7-8 weeks. But when I used to go to Starbucks, I used to go every day. The amount of teenagers I would see in Starbucks was crazy. You got to think that they're going to be Starbucks drinkers for the rest of their lives. They're going in, they're getting all these crazy drinks. They're going in with their parents getting these drinks. They're going in after school getting these drinks. Starbucks has a clientele that's going to be loyal and is going to be with them for a very long time. So I like it. I think that they can get their margins back up. I think they're going to do some things that are good. I still think that they should institute a monthly plan for $10 a month or $5 a month to the app members, whoever has an app, where your order gets put in a queue that gets prioritized. Because for $5 a month, to make sure that by the time you get there, your drink is ready, I think you'll be surprised how many people pay that.
Yeah. I think that is fair. I just think the new CEO has to kind of turn things around for Starbucks as well. What about Philip Morris?
Another company, I think there's more value in Altria and British American Tobacco, but Philip Morris owns Zinn, and Zinn's been taking off like a rocket ship. So not hating that.
Okay. Kinder Morgan, we know you love that one already.
Had an article come out this morning on him.
Really, dude? How do you write you wrote it on Thanksgiving? Like, what is going on here?
I may have worked on Thanksgiving.
I don't know how you get these articles out every day, bro. I can't feel bad about. I can't feel bad for you because Seeking Alpha is paying you really well to keep pushing these articles. But good.
Look, I didn't have to leave.
Dude.
I didn't have to leave home until noon yesterday, so I wrote an article yesterday morning.
You could buy a Lambo with this Seeking Alpha money. Goodness gracious, bro.
What's wrong with working yesterday morning before I go after Thanksgiving?
Nothing is wrong with it. I'm just saying you are making.
What's wrong with working Wednesday night after I get home from the office and writing an article Wednesday night to come out today when I knew the markets would be closed yesterday?
You're speaking like such an American. Just work, work.
That's all I do. Come home from the office and I write a couple articles on the weekends. I'm going to write an article or two today.
And while you're writing the articles, you enjoy a nice glass of milk with.
I do.
Potentially.
No, not potentially. not potentially.
Yeah. I love this, dude. When you sent this to me, I love this. Like,
yes.
Cookies and milk. I love it. All right, I think we talked about a lot of stuff, guys. We talked about financials. We talked about energy. We talked about a bunch of the names that are out there, Target, Nike, etc. Business development corporations, real estate, philosophy around dividends. And overall, Steve, I guess you would say that this is one of those parts of your portfolio you just can't look at and obsess over because it's not going to go up 4 or 5x in a year.
You can't. No, it's not. You can't worry. If you want capital appreciation, you got to go somewhere else. You got to be okay with not generating a lot of capital appreciation. Maybe you will, but the potential is much better in other places.
Okay, so we're done with the dividend talk, but I want to ask you a question about the dividend talk because when you see something like this is on my screen right here, where the optimist is catching a tennis ball. Yep. Why did the conversation we had for the past 2 hours even matter? Why shouldn't people just keep buying more Tesla when they see this?
I mean, once again, depends what your investment theory is. Depends what your strategy is. Why can't you own both? I mean, you could own all Tesla. We know people that do.
Yeah, but if you own both, you're giving up some of the opportunity costs of just having more Tesla.
Right, but you're also mitigating risk and diversifying. So it's whatever it goes back to your risk threshold. Yeah. Maybe Tesla stays here. Maybe it goes down. Look, bring up a 10-year chart of Tesla. People who went all in on Tesla have had periods where it has not worked out. Now, granted, it's great now, but I mean, don't go max because that's so long. A lot of people were not investing then. But over the past 5 years, if you were buying in 2021, you had a really bad 2022 and part of 2023. And even there, I mean, you could have bought the end of 2023 and until May, you were probably not that happy.
So what are your thoughts on that robot video? Do you think these bots?
It's the only reason why I'm invested in Tesla.
Yeah.
The only reason.
It looks like the bots are coming soon, bro.
I was having this conversation with my dad last night. He said he's absolutely buying one when it comes out.
Oh, really?
He said there's no question in his mind. Oh, it's the first thing he buys. The second it comes out, he's getting it. Because think about it. He's older. If that can eliminate him having to do tasks that are more difficult for him to do, I mean, you got to think about the applications for bots. Even for an elderly person, you cannot carry a 24 pack of water into the house from the car. You just can't do it. I mean, there are so many applications for bots that people are not thinking of. And this is why I go back and I say, at a $20,000 to $25,000 price point, you're going to see so many of these in private homes because elderly people cannot do certain tasks. If your washer and dryer is on a separate floor, it's very hard to go up and down the stairs.
Right.
Even if they're on the same floor, those things get heavy, the bending and everything else. You're going to see people buy these.
People are thinking it's going to be like the iPhone where everyone has it.
Yes, it is.
Yeah.
Not at first, but eventually it will be, because think about this. If you get a car, you're most likely financing it over 5 years. You get a bot, you're probably going to finance it over 5 years. And even for people that are not elderly, and I have not changed on this. How many times have I said this? If you can have a bot to cut the grass, to do the laundry and clean the dishes, it is well worth it. How many people do yard work and then don't want to do anything the rest of the day because they were in the sun for 2 or 3 hours? It takes a lot out of you when you get older. I'm just saying that you can free up your time and do other things than doing these things that are not productive. It is what it is. I think that people are really underestimating the healthcare applications for it. Patient handling. The amount of workman comp claims from patient handling is crazy. There is a whole segment that this is going to optimize. I don't think people are bullish enough on robots.
Yeah, look, I would agree. I think it's coming and it's going to be pretty exciting over the next 5 years. And I think Tesla's doing all these videos because they're teasing an announcement pretty soon. So
they better be.
All right. Well, did you enjoy your Thanksgiving?
I may have overdone it, but yes.
Did you? You know, I woke up late, right? Like I woke up at 9. I missed
Yeah, I know. It's ridiculous.
I was so. The food put me to sleep, Steve. The food. It was the
You're
food
27.
You keep saying this like it's so impossible for a 27-year-old to sleep on time and wake up on time. You expect me to sleep at 2, wake up at 8, or wake up at 5.
All I'm saying is maybe you should go get your blood work done. And maybe you should see if you need to change your diet or not, because you should not need like this amount of sleep.
I don't, but after Thanksgiving, when you eat that much food, like you're knocked out, you're tired. Okay. You're not buying it.
No, not at all.
Did your nephew enjoy the iPad?
Christmas gift.
Oh, it was a Christmas. Oh, he didn't. Okay, hopefully he's not watching, so he doesn't know that Uncle Steve got an iPad. All right. So you ate food. What was the food that you ate? Like turkey? Did you guys eat turkey?
Yeah, everything.
Like ham, ribs.
Let's just say the amount of dessert that was there was crazy.
Like you guys have a typical American Thanksgiving, like actual Thanksgiving. Macaroni, cornbread.
No, neither of those, but
you didn't have macaroni?
No.
Wow. Okay, that's the only thing I like Thanksgiving.
No.
All right. Well,
yeah, you buy anything today on Black Friday?
No, nothing. I mean, did you see Shopify's website though?
No.
This website is crazy. It shows you how many orders are happening at the same time. Look at this thing, dude. Look at this.
Wow.
Per minute. This is like they put in work to make this thing happen, bro.
That's awesome.
That's wild. Put in the chat if you guys bought anything. Steve, did you buy anything on Black Friday?
Not yet, but I will be buying a few things today or Monday. I got a few things I need to buy. I need 2 computers. I need, maybe I just need 1 computer, but I need to potentially buy more baseball cards.
you see that? I can press gravity and these things go up, and then I press this and they fall. Like, this is wild, bro. The amount of engineering they did to make this happen. So cool.
It is.
All right.
It is.
Cool stuff. That was good Thanksgiving. Hopefully it was a good stream. We can reference this for the next couple months as if anyone wants to learn more about dividends. I think we talked about a lot of names, a lot of sectors. And okay, Steve, let's see if you'll give me this. What percentage of your personal portfolio is in dividend stocks?
I have no idea.
But if you had to guess, like 10% out of all of it, 20%, 40%?
So the reason I have no idea is because Meta is now technically a dividend stock, right?
Like, get rid of Meta. Let's talk about the Coca-Colas of the world. How much of that is your portfolio? I feel like it's 20%. I think that's a decent assumption.
I don't know. I don't know. I'd have to really make a spreadsheet and look, because I have a lot. You gotta remember, we have a lot of ETFs that technically generate dividends.
But would you say you're definitely more growth exposed?
Oh yeah, I definitely have way more growth exposure considering the Meta investment, Nvidia, Tesla, Alphabet, Amazon, yes, Palantir, SoFi, yeah, way more growth.
Yeah, that's what I thought. All right, folks, that's it for us. Enjoy some time with your families. We will have Palantir Weekly tonight at 11 p.m. So we'll be back for Palantir Weekly. No market close because market's closing at 1 p.m. Steve, I think I might go back to sleep.
You're not going back to sleep. Do not do that. Like, what are you doing?
I have nothing to do today. I don't know. I'm probably going to go out, maybe run some errands or something.
Today's the worst day to run errands. What are you talking about? Run errands.
That's true. You're right.
Why don't we start an alternative asset business? Wait, no, I'm serious. Like, this may be my project for 2025 is to put everything in place. So in 2026, I launch a full-scale alternative asset business. Like, I'm really considering this.
I just love at the end of every episode, it comes back to, hey, let's just start an alternative asset investing business.
I think we're going to do it.
All right, word of the day is foodle.
Foodle.
To talk or act foolishly. They tend to foodle during meetings, throwing in random comments and sidetracking the discussion. The children were supposed to be cleaning the room, but they just foodled around, chatting and giggling instead. I think we tend to foodle a little bit, Steve, during our podcast, but more often than not, there's value instead.
I don't think that you're up on the whole Pokemon world.
I'm not. And one day, but I own XRP now. I have XRP.
You do. So I can't give you shit for that anymore.
You can't.
But
once you buy more, I'll buy more if you do.
That case of Surging Sparks that I bought?
The cigars?
No, the latest Pokemon set.
Oh, they're up.
You got to check this chart out. This is what is happening in the alternative asset market's crazy. I gotta share this and then we can go. Hold on.
Okay, one less chart, then we're gone,
So
guys.
crazy. So
I got $150 of XRP. I got 147 about it.
I cannot believe this. Hold on. Share screen.
Ray, thank you for being a channel member. Love you all. Happy Friday. Ray, happy Friday to you. Thank you for being here.
So I paid $650 for this case a month and a half ago or 2 months ago.
It's 11.
Month and a half ago. Month ago, something like that. And it's selling right now for almost $1,200. The demand for this stuff is crazy.
Look, we're in a market where people have excess liquidity and they want to
crazy. I mean, there's some other good deals, like even on the earlier sets, like Obsidian Flames, even that is starting to catch a bid.
You own these physically in your house? They're like,
most of them are in a storage unit that's not here. I'm not stupid. I don't keep this type of shit laying around in my house. But yeah, I mean, I may have like 2 or 3 cases that I need to transport, but the majority of my stuff is at a storage unit.
Why don't you keep it in your house? You just don't want to have too much stuff there. You don't want to get robbed.
Because I talk about it too much. I don't want people thinking they can
Wait,
come
hold on.
through.
You're afraid of someone breaking into your house and stealing your Pokemon?
Oh, I mean, no, I'm not afraid. I mean, they're not leaving if they do if I'm home, so I'm not really worried about that. But
we need to buy some Smith and Wesson after that. I love it.
let's just say that you're not leaving. like there's not even a Bronx Tale, like the scene with him actually going, closing the door and locking the door. We don't even get to that stage. So I'm not worried about it. I just don't want to keep everything here. Like, look, God forbid there's a fire. God forbid anything like that happens. Just why take a risk? I have a storage unit. Put it all there. Why take the risk?
All right, so last question. Would you rather buy stocks or Pokemon cards over the next 5 years?
Stocks. But Pokemon sealed product has outpaced the S&P 500, though. Like, that's not untrue. It's completely true. I've showed the numbers.
Yeah.
Like, it is outpaced it. And so I'm not going to blow up my buddy's spot too much, but I've been on his podcast a couple of times. We talk every week, becoming a pretty good friend of mine. This guy, Alex, he runs a YouTube channel, Nostalgianomics. He has been doing 3 rip and ships a week, and the amount of product that he goes through is insane. And the rip and shippers are causing there to be less Pokemon product and for sealed product to go up in value quicker than before. One of his last streams was 5.5 hours. And people were just on his website buying packs. He was ripping them online on camera and then shipping everything out the next day. I mean, the amount of rip and shippers is crazy out there. The amount of product getting opened is crazy. Sealed product, I think, is a very good investment. I mean, look, I think you thought I was crazy when I told you I was spending $430 on a box of Evolving Skies.
I did.
I think I did that 8 months ago or something like that.
Yep.
Evolving Skies is at, hold on. I think it's at like $900 right now.
I mean, look, it's done well.
The Pokemon market is wild. It's wild. Like, I am really thinking about starting a alternative asset business with sports cards and Pokemon. I just really need to figure out how I would do it, given that I don't want to stop writing on Seeking Alpha, and I can only dedicate maybe 10 or 20 hours a week to it. But I think there's a way to do it. But yeah,
and you don't actually play Pokemon cards, right?
No, I've never even watched it. I don't freaking care about it.
Do you know what Pikachu is?
I mean, I do now. I didn't know what Pikachu was 6 months ago or 7 months ago. I do now. But no, I've never played it. I'm never going to play it. I don't care about it. And it just, like, share my screen real quick. Like, over the past year, like, I bought this box at $430. This box is selling for $947 right now.
Yeah.
It's just wild. Like, it is wild.
Look, I think it's a solid way of diversifying too, because there's all these different industries.
Look, I went to a card show the other month. It is a very happening industry, and look, I'm thinking about doing something with it. I don't know. We'll see what happens, but I want to get into it more than I am now.
All right. Joe says the stream will never end. All right, we should end the stream. Are you doing anything else today, or just chilling at home?
No, I'm going to figure out something to write about, and I'm going to write an article.
Dude, I don't get it, bro. Like, I know I go live. I go live twice a day, so for me, talking is my thing. But to sit down and to type an entire article 3 times a week or something, whatever you're doing,
5 times a week,
5 times a week on a different stock, and do
Right.
all that research. That is a lot of work, bro. It's a lot.
I mean, instead of typing, just use your microphone. You have voice to text.
Yeah, but wouldn't Seeking Alpha will reject all my articles? Because even if I talked into a microphone and used AI to turn it into an article, I feel like Seeking Alpha will reject it.
Well, you can't use AI to turn into an article because you'll get rejected.
I'm going to submit an article and see if they can find out.
Trust me, they'll find out.
Are they that good? They can find out.
I have never used AI once, and one of my articles got flagged, and I was going back and forth, and I wrote to them, the editor. I'm like, look, this is where I cited this from, and I completely reworded it, and this is not a AI at all. It was just one little section that got cited. And I said to them, this is from the 10K. That's why it's similar. I'm using very specific numbers that match because I'm pulling this from the 10K. And they thought that AI wrote that section. And because I've never gotten flagged before, they obviously agree with me when they took a second look at it. But I got flagged once. And I've written over 1,000 articles. Trust me, you try writing an article with AI, you're going to get flagged.
Dude, I could write 1,000 articles a week. I could just take my clips from the market open, turn it into an article. Dude, I could be milking the Seeking Alpha money.
If you figure out a way to do it, you could. I don't think you'll be able to.
No, they're probably going to reject me. Also, AI is not good enough yet to write to that level, I think. All right, good stuff. Thank you, Steve, for joining. Steve Seeking Alpha, I am putting it in the chat. Please make sure you follow him there. Click on some articles, subscribe to him. And I mean, you got 5 new deep dives a week is what he's doing. And it's very, very helpful. And, you know, honestly, I'm not sponsored by Seeking Alpha or anything, but I bought the subscription the other day because I was like, you know what? I'm reading. First of all, I mainly bought it because Steve publishes an article all the time and I have to read them. So
there's a lot of good information on there. Don't just get it because of me. Like, I don't think that I'm worth the money on there if you're buying it just for me. There's a ton of good information on there, and there's a lot of good people on there that put a lot of time into research. And look, I'll shout somebody out right now. This guy, Brad Thomas. You want to know something about REITs? He's the guy. Like, this guy is freaking awesome. So there's just a lot of good content on there. And it's good because it's not just an echo chamber of bulls. There's a lot of people who write bearish articles on there. And I think it's important to get another opinion on something that you're bullish on to see if your investment thesis gets blown up. And then there's some guy named Matt Money who wrote something about like rocket money or something like that. But I mean, I don't know.
wait, I want to see when was Matt's article? August 26th.
I mean, he's a slacker. I call him like every other day and tell him to start writing again because he's slacking and he just doesn't want to write. I don't know.
The stock since his article, stock's up 307%.
Yeah, the guy nailed it. I don't know why he doesn't want to keep writing.
It's not bad. Not bad at all. Matt, I'm going to follow you right here. I think I'm not even following Steve. Let me follow Steve.
I mean, Matt should completely write. I mean, I don't know.
Hold on. Let me see your Seeking Alpha.
He's too good for us, Matt. He's too good for us.
All right, Steve, I'm following you. I am your 34,000th follow.
Yeah.
There you go. Matt Money's too busy counting Rocket Lab profits. That's correct.
He is, but that doesn't mean that he can't write more.
Well, look, this Seeking Alpha thing is a really good side business for you because you are doing very well and you're obviously posting a ton. You're consistent, all the stuff, right? That's what matters in this.
Yeah, he's got to be consistent.
Yeah. All right. Thank you, Steve. Appreciate it. Hopefully everyone had a great Thanksgiving. We got a long weekend, and I'll be back Sunday night on the Future Show and tonight on Palantir Weekly.
How much are you going to sleep over the weekend? You just said you have a long weekend. You going to go into hibernation? I mean, do tell.
Dude, I like it. I don't sleep a lot throughout the week. You don't get it, bro. My mind is on 24/7. I'm occupied with all these screens all day. When I finally get to my bed, just knock out, bro. Just sleep. All right. Thank you, everybody. Appreciate you guys. Have a good one. Steve
Yes,
will go,
hashtag admit needs sleep. I agree.
Steve will go write some articles. And yeah, I'll be back tonight, 11 p.m. Bye, everyone. Have a good one. See you guys in a bit. Bye-bye.
Later.